Keep a neutral mindset. Accept both wins and losses equally. Keep a neutral mindset. Accept both wins and losses equally. Bias check-in. What is the current market outlook? Are you trading what is? What is the current market outlook? Are you trading what is? What is the current market outlook? Are you trading what is? What is the current market outlook? Are you trading what is? Trade without fear or overconfidence. Spontaneously enter into the zone. Perceive what the market is offering from its neutral perspective. Think in probabilities, not certainties. trust yourself to execute your plan under all market conditions. Maintain discipline regardless of winning or losing streaks. Every moment in the market is unique. Bias check-in. What is the current market outlook? Are you trading what is? Control emotions during volatility. I continually monitor my susceptibility for making errors.
Fairly easy or straightforward to find an indicator which will work in a particular market condition. So this could be a trending market, it could be an indicator
Anything can happen.
Watching trend continues. After all, I do not lose too much. A second tell, and this will be the focus of this session, that the trending market is coming to an end, is to look out for divergence. As mentioned before, divergence occurs if price, let's say, goes upwards, but an underlying indicator tells you the opposite story. Yeah? If this happens, and if this happens repeatedly, it can be a very strong sign that the trend will come to an end and will reverse to the opposite direction. All right, so now just to contrast a trend entry versus a counter trend entry, let's have a look at this slide here. Both the upper part of this chart and the lower part, they show the exact same symbol. In fact, it is Apple on a daily chart. On the upper half here, we see a classic trend entry, which happens when a new trend is clearly established. And we discussed trend entries in session 1 of this masterclass. Why is this a classic trend entry? Well, for various reasons. First, the previous is to use a very narrow stop loss. For example, a stop loss placed here. If you are wrong and you get stopped, or at least you do not lose too much. Consecutive divergence signals were spotted without cluttering the chart. And we're going to look at this, of course, by investigating on the S&P 500 stocks. And for every stock in the S&P 500, there's one entry here.
So bullish divergences occur in areas where volatility is stabilizing.
Keep a neutral
and
mindset.
decreasing.
Accept both wins
volatility
and
is
losses
shrinking,
equally.
decreasing, while the price and price momentum are accelerating upwards. Now, these moments often indicate strong bullish support, which usually happens before an upward reversal. These are usually good long entry points, and they tend to happen during consolidation periods after an uptrend or during a pullback before a bullish trend continues. Now, this type of price action is commonly known as grinding upwards or a churning, where volatility is very low, but price is extremely steadily moving upwards. And during these periods, people tend to rightfully expect short squeezes or violent moves upwards because volatility is low, yet the trend is decisive, it's going up. So simply put, bullish divergences happen when volatility is low and decreasing, while price and momentum are sloping upwards. Okay, so with that in mind, bearish divergences occur in areas where there's an opposite, basically set of conditions. Bearish divergences happen when volatility is high and increasing, while price trend and momentum are going down. So bullish conditions basically are volatility is low, price is going up. Bearish is volatility is going up and price is going down. So usually when this happens, it's because we've hit an unsustainable top, which is preceding a drop. And there's failing strength in the support levels that we've recently known. And when these support levels break, it leads into a downtrend. So people start to panic, as Daniel mentioned. If price is slowly churning around the 4,000 level, let's say Ethereum or Amazon or something, and we break under 4,000, well, people are going to panic. It's a big level. We're going to drop down quickly. And these are commonly also known as blow-off tops. So these are usually prime points of reversal. When we hit
I understand the
top,
absolute necessity of these principles of consistent success, and therefore never violate them.
Quickly reverse into a downtrend. These are often good short entry points because there's no stability or support. So simply put, volatility is high and increasing and price is going down. So I'm going to show an example here on a chart. And this is a chart of Nasdaq mini futures. And I've just pulled up a simple indicator of the volatility down here, the ATR, and I put some trend lines. So this was during the Corona crash, actually. And if we look back here, we see there's relatively low volatility relative to what's going to come. And once we hit into the Corona crash here, volatility spikes upward super rapidly. If we check this trend line, in a period of just 5.4 days, we had this massive crash and volatility spiked up, 5 to 10x. But then, and this is indicative of, the high volatility and downtrend, which accompanies a bearish divergence, a red cloud. This is bearish action. We had a quick spike in volatility and it preceded a huge drop. But then in this bullish cloud, which follows it, volatility decreased much more slowly. We started to have a steady churning upwards type of action. and volatility decreased, but not as fast as it had increased. So we're seeing that volatility decreased and price sloped upwards. And we're seeing that
Spontaneously enter into the zone. Spontaneously enter into the zone. Stay completely focused on the now moment opportunity flow. I objectively identify my edges. Accept full responsibility for every trade. Bias check-in. What is the current market outlook? Are you trading what is? Every moment in the market is unique. Control emotions during volatility. You don't need to know what is going to happen next to make money. Every moment in the market is unique. I completely accept the risk, or I am willing to let go of the trade. I completely accept the risk, or I am willing to let go of the trade. Know that consistency comes from your mental framework, not trading strategies. Bias check-in. What is the current market outlook? Are you trading what is? Trade without fear or overconfidence. You don't need to know what is going to happen next to make money. Keep a neutral mindset. Accept both wins and losses equally. I understand the absolute necessity of these principles of consistent success and therefore never violate them. Keep a neutral mindset. Accept both wins and losses equally. I objectively identify my edges.
Hedging tools, trading tools, such as options.
Yeah, that's good to hear. I think that more traders should definitely be looking at the options. I think a lot of people, when they look at crypto and then they look at crypto futures, they almost don't even acknowledge that they even exist. And so that's why I wanted to talk about it and bring more awareness to it. So I was reading the other day, the growth in volume and open interest you reported, you had nearly 39 billion notional open interest as of September of 2025. I found that to be really an extraordinary number, and I'm curious how you're thinking about risk management in this business, managing crypto volatility, margins, and you also are talking about how does 24/7 trading impact the framework?
Yeah, so risk management has always been a foundation of our model, right? And that's no different for crypto. As open interest and participation have grown, we remain focused on maintaining those same robust safeguards that apply across all our markets. And that would be things like daily settlement, rigorous margining, and really a well-tested default waterfall. Now, the higher volatility in crypto simply means our risk models and margin frameworks have to be more responsive, and they are. We continuously calibrate them to reflect,
I continually
realize,
monitor my
and
susceptibility
imply
for making errors.
in those underlying. Case in point is what we observed just last week, when more than $19 billion in value was wiped out due to auto liquidations across both centralized and decentralized unregulated platforms. That de facto deleveraging really caused open interest on those venues to fall fairly sharply. In contrast, our market's open interest has actually grown, and it's grown more than 20% in contract terms since the weekend of October 10th. Today, CME is number one in futures open interest across every cryptocurrency on which we list futures. Now, we've led in Bitcoin open interest since November of 2023, and now also lead in Ether, Solana, and XRP. This is really a reflection of both institutional and individual participation, or individual participants turning to our trusted markets, which offer them safeguards that are not available elsewhere. That includes mutualized risk management and segregated customer accounts. On the operational side, clearing remains fully integrated within CME's broader infrastructure. So client protections and capital standards are consistent across all our asset classes. And as for 24/7, crypto is certainly unique, and we see our expansion into round-the-clock trading for crypto as really a natural evolution. Cryptocurrency market is 24/7, and we really need to empower our clients with that ability to manage risk in real time whenever and at whatever time they need to, ensuring that our market participants can confidently manage risk in a market that never sleeps.
Yeah, I mean, it just makes sense. At some point, I figured that would be the evolution with them open the way that they are.
You don't need
That's
to
why I
know
talked
what is
about
going to
the
happen
current
market to make money.
When you
Are you
have a
trading
big
what
move
is?
over the weekend, you've got the gap up on Sunday night with the futures and all that. Last question. How much of this is institutional versus retail? Because I can see why institutional open interest is growing a lot, right? We get the second accounts, as you mentioned. And for them, they're just more comfortable probably having money holding Bitcoin or Ethereum in futures accounts with clearinghouses versus holding spot on some other places. And so I could see that evolution and that balance. But how much of that is institutional? Are you seeing that same growth in retail? Because to me, I think a lot of retail that I see still is very focused on spot.
Yeah, no, great question. I think that we've seen, the participant mix in our space broaden meaningfully. I think early on, most activity really came from liquidity providers, crypto native firms, and dedicated crypto funds. But as the market evolved, especially with the introduction of ETFs, we really started to see a wave of hedge funds, particularly relative value players, engaging through popular basis trading. Now, as liquidity has deepened and the market has matured, those same funds now are expanding into more traditional strategies like statistical arbitrage and even taking outright directional views. We see asset managers beginning to use our products to manage exposure and hedge risk. We're also seeing banks more actively trading our crypto futures and options to hedge structured products. We're even starting to see or starting conversations with DApps or digital asset treasury companies about using our products for yield, hedging, and as well as access. Now, when we look at retail in the space, we've seen retail could also expand.
Trade
for
without
example,
fear or overconfidence.
we list both large and micro-size retail contracts. Our micro-size contracts are size where they're very accessible for retail market participants. In 2023, on Bitcoin futures, we averaged about $30 million a day across our micro contract. That grew in 2024 to over $700 million per day and continues at that space today. So we've really seen a more than doubling in terms of say, retail participation in the space. And that holds true for both our Ether as well as our recently launched Solana and XRP contracts. So really the evolution tells a story that really crypto has moved from a speculative asset to now a more strategic asset.
No doubt. One of the ways that I use futures is I've been continuing to add to an Ethereum position. And if I don't want to sit in volatility that's going to potentially take ETH lower, I hope it's not happening anytime soon because I've been buying ETH. But I go to the futures because I'll keep the spot position and I'll sell some futures against it, because if I'm like, look, if ETH is going to start getting cracked here, I'm going to short some futures. And it's so much easier to short the ETH futures than it is to just go in and try and sell your ETH, and I'm not working stops and spot. And so I think I could see a lot more retail even understanding it from the hedging perspective, especially when you get into less expensive products like Solana and XRP. those are products where a lot of people probably want to hold spot for a longer term investment or whatever they're looking at using it for. Speculative, doesn't matter, that you can go to the futures to manage that volatility, because you're obviously going to be continuing to add to some of those positions, and futures are so much easier to short. And I think having retail understand that, I think, gets them more and more involved in futures markets. Gio, it's always a pleasure to speak with you. Love getting inside.
Maintain discipline regardless of
and
winning
see what's going
or losing
on
streaks.
with the exchanges and the products. It's always a pleasure. Everybody, Giovanni Vicioso. Follow him on CME Group and everything that he's doing there. Giovanni, thank you so much for joining me today.
Thank you so much for having me on the show.
All right, we go right to farm. He just comes right in there hot, man. That was great. You know, everybody, just a quick kind of thought process about, you know, crypto futures. Again, look, it's a time right now where I talked about this dollar trade. When you have big dollar movements, you're going to have big moves in crypto futures. A lot of you are sitting there trading the indexes. Indexes are pretty flat today. I continue to say, you heard Gio talk about all the different products that CME Group offers, from Bitcoin futures down to micro futures. They've got basis trades. They've got Friday futures for Bitcoin, which expire every week. There's all sorts of different ways to trade it. For me, I always have kind of been a spot trader when it comes to crypto, but I love the futures during times where, again, like days like today, where the dollar is up strong. If Bitcoin and Ethereum start to get cracked, you know, I look at that as an opportunity where even if I sold Bitcoin or Ethereum, I hold them in spot. I'm really kind of like not short, but I'm short against my position. So even if I look at it as if I'm wrong on the short, I'm still making money in the spot. And you have the ability to precisely manage that position with the different products that are available at CME Group. It's just something I wanted to point out before I got to you, Farm. But that was that. And here you are. Good morning. You got the NT Live hat on, the NT Live shirt. I got my NT Live hoodie on today, as that's on this side. You know, you look in the camera. It's the opposite, Anthony. You should know that by now. Yeah. So great to see you last week. How you doing?
I'm doing pretty well. How about yourself?
I'm doing great.
An edge is nothing more
again,
than an indication of a higher probability of one thing happening over another.
Crypto against currencies, and equities are a little quiet. It's dollar against gold. Let's dig right into the charts this morning. Let's take a look. So this morning when I came in, the main thing that I was looking at was the yen, and I'm going to pull up the yen chart here just to start. And the yen has just been getting really kind of clobbered up against the dollar. And when I look at the yen, it's broke out weekly lows. It's actually looking like it's almost possibly headed for multi-year lows not too far from now. It's not far from here much at all. But if it does get down there, it gets very interesting to see what that looks like and how much of that dollar move starts to impact equities. You know, when we've had some big moves when the yen is getting really clobbered and the equity markets have gone with that as a big dollar move has been pushed higher. And I look at this yen move and say, you know, I look at COT data, of course, to start to kind of see how everyone's positioned. And it's not overly positioned here one way or the other. It's actually quite balanced. So I don't see anything specifically coming out of that. It was pretty much kind of really at the peak that it had been back in May. And it's since then the positions have just been unwind on both sides. But I look at that weekly low, 65 in the yen. If that were to get taken out in the next couple of sessions, and people forget, when you go back to S&P, I'm actually going to have to go back to it daily here. If you go back to S&P, when this move happened here, that was a day where the yen took a big hit and the dollar had the big move higher. And that is something to keep an eye on. We're nowhere near looking like that right now. I think when I look at equities, they look bullish to me. But nonetheless, that's what kind of triggered that. And I'd be very curious to see what happens if the yen starts taking out.
An edge is nothing more than an indication of a higher probability of one thing happening over another.
Keep an eye on. I don't see that as a big deal today, but I do think it's something to watch going forward. When I look at what's happening in equities today, and we'll stay on here, again, 67.20 to 25 was an area you and I talked about not too long ago. It's a big area for PACs as well. We're well above that. We're sitting up here, back to drifting higher. It's hard to see any reason other than higher, but That's why, you got to go out and trade the days for what they are. I think today's a little bit of a struggle, probably because the dollar moved, but volatility's just got us totally trapped. We're still inside. Let's not forget, we're still inside that big move from that one day. And it's kind of crazy even to think that farm that we had this one big move down, and we've now had 1, 2, 3, 4, 5, 6, 7 trading sessions all inside that day. And so it's perspective, right? That's what I try to bring. I'm not sitting here scalping anymore, so I like to bring perspective. We're still in that range as well in the Nasdaq too. We're just in that same range. Now we start getting outside that range, especially in a day where I think that the dollar strength should cause some weakness. I think that sparks a decent move higher in equities. I think if equities do make a higher high across the board in Nasdaq and S&P today, that is not a move I would fade. I think the opposite would be if we started to fade lower and we didn't make a higher high and dollar stayed bid. That's not a move I would fade today, because I think there's a lot of wiggle room back into range, and there's some wiggle room out of range. And so, again, it's a day where I think you could have a potentially trend day setting up. So I think it's careful against the intraday trend for whatever that brings us. We'll have to wait and see. Talk gold, and I'm going to hand it over to you. Gold to me looks toppy.
I pay myself as the market makes money available
top.
To me.
And here's what I see in gold. Gold moving averages have been straight up. We're finally coming back into them a little bit. So I think it's going to be very choppy if we start to come back down any further than we are right now. But when I look what happens in gold here, the Bollinger Bands, anytime I start to see them get a little sloppy like this, and they're not turning over yet, they're still staying expanding to the outside, but the bottom one is starting to come back inward. I think that we are in mean reversion consolidation here in gold very soon, and it's already starting to trigger a potential setup in my beacon indicator. It's not quite there yet. We have to see a daily close below 41.76 to call for probably 4,000 to 39.50. I don't see that yet. I think the bulls still have the edge to potentially work their way through it. But with a strong dollar today, gold is weak. Be very careful, everybody, again, fading it. It's a day where, because the dollar is up, if we start to see any trend days set up that are either counter to the dollar or they're actually going to start going with the dollar, and when you would expect the opposite to happen, like I went in equities, just don't fade them. I almost potentially see trend days setting up in equity today. So we'll see. That's my thought initially on equities. What do you got?
Yeah, I think intermediate term or intermediate picture, I think looking at FX volatility is probably important, right? It tends to blend with equity volatility, bond market volatility. They sort of all come together, right? And I guess something I'm going to keep in the back of my mind the next couple of days is that, like, okay, the VIX got stomped the last couple of days, and now we're seeing some moves in currencies, and I don't know, we just need to keep an open mind that volatility maybe isn't quite done. But you're absolutely right. Things look constructive. I agree. On gold, I took a little
I act
short
on my edges without
Friday
reservation
and,
or hesitation.
Covered some and round trip the rest. Wasn't super interested in, shorting it just yet, but I think you're right. Looking at it here, it looks a bit toppy, and I'm going to have to chart that out properly. So we'll see how that goes. Equities, I started with NQ because it's a little bit cleaner, at least with the overnight session. So first, backing up, like you said, we are still inside that massive mother bar candle from the 10th. And then coming into this week, we had an inside day on Friday, inside of an inside week. And we cracked the inside day Friday. We actually opened on a true gap well above that in the case of NQ. And then made a run for the inside week high, which was this 179.5, cracked that inside week high. We basically test range highs. So that's where we're at, right? So we came in there yesterday. And now overnight, during Asia, we kind of peaked above yesterday's high and then got sucked back down. To me, like, really all that matters to me today is yesterday's B period single prints. And so if I kind of zoom in here on the 30, you can see right here, it is not these levels. This is my weekly 253, 269 level. The singles are more like 240 to 260, I believe. And so to me, for this, look above and fail of yesterday's high to have, kind of any bearish potential, we're going to need to see sellers get through these singles and ultimately make a run for yesterday's low. I mean, we've seen a lot of these like kind of bearish setups not yield bearish results much of this year. And this is, I would say, a kind of bearish setup. The protection of these B period singles is very, very key to me today. So if we do come in and, for whatever reason, if it's, the currency markets or, whatever it is that causes some volatility, and we give back these singles,
Keep a neutral mindset.
A little
Accept
bit
both wins and losses
about
equally.
this move, and then we look for the inside week high, which is going to be critical to sustain. And then, of course, yesterday's low. I don't think you want to be giving back yesterday's low. Outside of that, if we do break to the upside, like you said, I mean, if there's a sustained break above Friday's high, then just, cover your sell button, right? For a while anyways. If we come up and we pop those highs, remember, it was not a good high. NQ has an ETH high, ES has an ETH high as well. We're also relatively equal. Like it's not a good high, right? If you were to like call a top, but we still have to respect range high until proven otherwise, right? So if we did pop those highs, fail back into range, and then again find some traction through these singles, and okay, fine. But to me, the spot to work against is these single prints, which is
Bias
basically
check
the
in.
overnight low.
What is the current
and
market
QBS
outlook?
did not
Are you
quite
trading
make
what
it
is?
there, which I wonder if maybe it does during cash. In which case it's going to push NQ a little bit deeper into those singles. So that to me is a spot to work against if you're looking to be long. That's the spot. If you're short, you're covering some there at least, and then maybe you can get a little bit excited if we get through 240s. There is still those like some minor demand sitting below there that could just end up with a little blow and fail. So for like NQ, I would be looking to potentially come in here and get a failed push below the overnight low and take that back the other way, at least back up maybe to this 313, 325 spot. So I mentioned that ES, not quite there. I'll flip over to the 30. So the ES singles, I want to say like 54 3/4 to 58, something like that. I basically am just going to use my 57 to 60 weekly spot as a proxy for that, but aware that we could get a push to fill in these singles. So again, that's the big spot to me. So if I'm looking to be long, I'm going to work against
Know
that
that consistency
spot.
comes from your mental
Cautious
framework,
if
not
it
trading
doesn't hold.
strategies.
And similarly, if we come down here, so the overnight low didn't quite make it there on ES. And again, I'm still kind of wondering if it does. There is, again, some demand that caused these singles sitting just below there. That could cause potentially a little bit of a trap. But I really want to see these singles hold, and I start to get a little bit concerned that we've gotten a retest of the top of range and failed. If we give back these singles, the inside week high is like right here on ES. And so these singles are even more important, I would say, on ES because of the fact that we would be giving back the inside week high. You do not want to give back the inside week high. This 41 to 44 spot then becomes absolutely critical to me on ES. That to me, that the reclaim of 41 to 44 was the retest, provides the retest of all-time high. It did that. Giving it back would be a problem. And then again, ultimately you have to give back a prior day's low at this point. And that would sort of confirm this as, we still have mother bar problems, and this might take a while to get out of that Friday range. So that's where I'm at today. All about the single prints from yesterday in B period.
Again, showing inside the daily candles what's happening with volume profile is key. And when you look at this, I agree with you. If it holds those areas, again, I think that equities, again, volatility's been sucked out of the market. Market's really just putting the Heisman to anything that's going on in gold and other areas of the market. Like I said, crypto down today, and it's just kind of doing its own thing this morning. If I see that area hold, hard to want to fade or against it. One of the things I want to comment on, people were talking about, or someone in the chat put, saying that the equity markets, let me read the exact comment too, said the strong dollar does not equate to S&P weakness. Run some data from Cullen. And the point is that I don't need to run data on certain things. I've been doing this a long time, and a lot of times you'll look at things that
Know that consistency comes from your mental framework, not trading
strategies.
strategies.
Sometimes it's a cash raise, a cash raise. And so when I see markets running into dollar and they're running out of other assets, sometimes they'll come in and they'll sell stocks too. And so my point is, I look at that as a market environment situation, not as an actual strategy. It's just understanding nuance. And it's context and nuance. What's happening in the market today that all of a sudden you're going, well, why are we going down with any sort of velocity, or why are we going up with any sort of velocity? A lot of times it'll be triggered by something else. So one thing I always look at as a trader is, in order to become a successful trader in my career, I've always learned that I have to understand the context and nuance of days. I have to come in and sometimes look beyond the charts if something is happening somewhere else and how that would play into the day. And if it doesn't, it doesn't. I don't need sometimes to be right per se. I don't even need data. I just need to understand that I've seen this type of movie before, and if it comes into play, I'm aware of it, and if it doesn't, it doesn't. I mean, that's just kind of the way it is. So when I look at things, I think as you go through time as a trader, you develop that intuition from seeing things like that. And again, today markets don't care about it, but they may at some point, and you got to be like, okay, kind of what's going on here? Why is this potentially happening? And that's the way I look at things. Especially like with the gold market versus the dollar today, I do think that is definitely an important thing to note, that when the dollar is up today against the yen, against the euro, against the Swissy, and you're seeing gold going down, hard to turn around in that day unless you start to see the dollar turn around. Now, gold could get oversold and all of a sudden have a massive bounce for sure, but it's a day where it kind of stays pinned, because it's like we're selling this and we're buying this. And a lot of times those trends stay at least for the day. If they go beyond that, we don't know. But again, context and nuance. Farm, again, great seeing you. Last week I had an absolute blast. Greg, you look great in the gear, man. I mean, especially that hat, man. Just
every moment
great
in the
on
market
you,
is
and
unique.
I can't wait for the next meetup. And thank you again for being with us this morning.
Yeah, you have a good day, Dilly.
All right, everybody. Busy morning so far for us. Not so much in the markets. Again, when you see what's happening in equity indexes, pretty tight day. I put in my morning note this morning, small and smart. That's all that it comes down to, because when you get equity indexes the way that they are right now, where we just saw what was happening with farm, and we see that, look, at ranges are a little bit tight, watch some key areas. That's what it's all about. You know, right now we're not seeing a ton of volatility. Come in, set the tone for the day. Don't be in a big rush. And that reminds me, it's Tuesday. What happens on Tuesday? Well, we've got Merit Black, we've got Christian Trading Boxes, we call it Black Boxes here on the network. And these are two guys that come in each and every week, and we're going to go over it in just a moment, and understand the importance of their preparation, because their preparation is what leads to their patience and what leads to their discipline. Everybody talks about patience and discipline, but it starts with your preparation. It starts in the belief system of your strategy and the work you've put in before you get to the screens. So it's about that time. Let's get ready to trade the open with Merit Black and Christian Trading Boxes. Good morning, guys.
Good morning.
Hey, morning, Dilly.
I mean, how much fun did we have? I mean, Merit, you and I laughed so hard. I had pains in my stomach. We were laughing so hard.
Every time, man. Yeah. You know how to host people. You know, you really do. You did such a good job of just showing everyone a good time and being so generous. And I mean, it was just, and we had so much fun, man. It's I knew that it was a great crew at Ninja. I didn't know it was that great. I'm going to be honest.
I understand
like,
the absolute
getting to
necessity
be
of
around
these
everyone in
principles of
person
consistent
and hang out.
success,
It was just,
and therefore never
I knew it was
violate
good,
them.
but it's such a great crew that you've assembled. It's really, really cool.
Yeah, I second that. Yeah, a great experience. You were such a great host, and everything was just great about it. I'm looking forward to the next one.
I'm still a little pissed about the whole arm wrestling thing, and I'm sure you are too, because I know you lost a little bit of cash on that, and I'm sorry.
I lost money too.
I'm sorry, Coach. But
you let a lot of people down.
Let me tell you this. Never doubt Jared Tendler. That dude is a beast. He's good at everything.
he is.
I mean, this guy is good at everything. He's good at pickleball. He's good at tennis. He's great at golf. I mean, we know how talented he is in our space, but that guy, he came out firing, Merit.
You know, one thing I actually started to consider, hopefully not to derail the conversation too much, but I think he might be a sandbagger.
I mean, he was a plus
so
five.
+1,
he had
and he's
5
firing off
birdies
a
on the
31
front.
On the front. We got to get Yip Strickler in here.
It was unbelievable. It was so much fun. You know, I wish I had more time to spend with all of you because I like you guys said, it was the group isn't good, it's great, and I really do cherish all the time I have with all of you guys in person. I love being with you guys on the network as well, and it comes through in the chat. You can see it. It comes through, and everybody that's watching us and knows that there's a bond with this group that goes beyond the screens, and so it's just a great moment for us to all get together. Different parts of the country all coming together. We missed our boy Leo. He was the only one that wasn't able to make it, but we'll see him soon.
Anything can happen.
Yeah, man, don't go. I know how to throw a party, and get ready for the next one. I'm already thinking about what's going to be, but we got to move on. We got to talk about some charts today. Every week, lately we've been starting with Bear. We're going to start with you this week, Chris. Let's go to see what you're looking at. So we talked about how markets are pretty quiet today, and again, I say this all the time, and when it comes to intraday trend trading and just in trend trading in general, I have not seen anyone showcase skills, at least on this network, really in my own personal experiences as well, better than you. What are you looking at coming into today?
Yeah, so I'm actually looking at corn today.
No way.
Wait, what?
I'm just kidding.
What?
Oh man, I was so excited. You dog.
I'm just kidding, guys. Corn? What am I gonna do with corn here?
Corn's actually in a decent setup.
Me
I
and
just
Bear
had
like
a-
Jack.
oh my
We're
gosh,
like,
he knows.
yeah.
I just had to pull that out. All right, so look, I think last week we were talking about how we were in this daily wedge sort of consolidation, right? We broke out of that yesterday. It was fantastic rally all day. It's just that's really like I'm a trend follower. I was extremely aggressive. It was fantastic, but so we've broken out of that in both ES and NQ. NQ corrected overnight. Its first sort of area of support was Friday's, not last Friday's, but Friday's the 10th breakdown. We can see that very clearly here. It was resistance, resistance, support. Guess what? We broke above it, and then overnight we just tested that in our bouncing. So if we can hold that, we can push up higher. If that ends up giving out during the day, then we can go test that prior week high, 120s area.
Stay
and then
completely
see
focused
if
on the
that
now
stronger
moment
structural
opportunity flow.
support holds and bounces back up. If not, we start to see a little bit of sellers taking place, and we move back down into the breakout area of both this box and wedge at around 25,000. That's been a good level. Now, as far as the hourly trade plan for today, my first scenario already played out, which was a pullback into the 250s area. We're seeing a bounce from that. We want to see maybe if it'll, I think you brought up that it might be slow because of the dollar going up. That can be a little bit of a longer consolidation. Maybe price wants to consolidate yesterday's gains a bit longer and give us a correction through time instead of a correction through price. If so, we can sort of ping pong around here between 250s to 330s in NQ. In ES, that would be around 67, 65, 68-ish to 67, 80s. We can ping pong here. If we do see a rise higher and we hold 330s in NQ, we're so close to all-time highs that we can just push up into that area at 394 to 410s. If eventually we do lose that 250s area here, this overnight low, then I can see us moving back lower into prior week highs to test that. Or if that does not hold, then the 110 support, where we have a lot of strong support there. Of course, if that doesn't hold, then we are most likely going to get a full back test of this large consolidation breakout at 950s, 960s to 25,000. A little bit of the same for ES. We want 67.60s to hold. If not, we pull back to 67.43, where I would imagine we bounce from there. If not, price wants to do a full back test of the breakout at the 67.18.25 area. But we're in an uptrend. Yesterday was day one of a possible new uptrend from the consolidation we were in. So I know we have earnings coming up, and I think we have CPI.
Think in probabilities,
Friday.
not certainties.
I can't remember if it's CPI or something else, but we have a news heavy week, and so we just have to. I have to lean with the higher time frame trend and see what we can get throughout the week.
Do we have those data releases, or is that a thing again, or is that not?
Yeah. CPI has moved to Friday, and so
Okay,
Pax
but it
will
will
have
be
it on
released,
his
okay.
session. It will be, yeah. I
Is
forget
that a
the
non-government
crew.
agency that releases that?
I honestly don't know. I was
Yeah, I don't.
Craig and Shai talked about that earlier this week as to why it has to come out. There was reasons for it. I'm assuming it still is a government report because obviously the Fed's looking at it. So, but I don't necessarily know the exact implications or reasons why it comes out. Shai will probably put in chat and correct us. But that's why we've got them, guys. I lean on them for that stuff. I ask them questions all day long. Merritt, I'm curious to see what you're looking at today because I know the equity indexes look kind of slow, and you know, you even said when Chris said corn, you're like, yeah, it could be a setup there. So I know you've looked at other markets. Curious what you're seeing today.
Well, I'm looking at corn here. It is in a bearish position overall. So corn has gotten killed, right? A lot of ags have gotten killed this year. It is in, and you know, Chris, you'll know what this means, a downtrend. And this 422 area is really, really key for that. The only thing I don't like about it is if you look at this 30-minute chart with my weekly profiles and weekly TVA, you see how it's stacking in kind of multiple highs here. It's
Bias
almost like
check-in.
quadruple
What is the
top, if
current
you will.
market outlook?
I
Are you
hate
trading
to see
what is?
that. You guys know I talk about that theme over and over and over. A lack of excess, a poor high. It's not a really good-looking high, but that is the only factor in terms
Think in
of
probabilities, not
that
certainties.
area of that high as being a place to short this for trend continuation. We're talking being able to go from right now, we're at 422 down to 413, 406, and new lows for the year into the high 300s. So this has been a really good trend. It's below value from last year, and it's a continuation play. So it's definitely something I have my eye on. You're right though, Deli. Compared to the S&P, we have this bad boy right here, gold. And as you know, I've been the boy who cried wolf every week. Gold's parabolic. This can't sustain. Blah blah blah. Well, now we've got a crack, right? Now it's actually we can play the right side of the V, right? We can play as we called it at S&B, the back side of the trade. So we're now in the backside of a gold break.
Big trade.
Sure. Could it find support somewhere and continue higher? Yes, of course it can. Anything can happen. But from my experience, as crazy as
Big
gold
trade.
has been, and
Big
this
trade.
is just such a classic pattern. You
Big
see
trade.
on the daily chart, the bearish bar totally engulfs the craziest bullish bar that we had up at the top, right? And not only that, but there's an element of breadth to it, if you will. If you look at silver, it cracked first and started to hold below some areas that were important. So, look, gold, or as Cordelli says, look at, gold could crack down to 3,900, right? We're at 42.
Yeah.
It could crack to 3,900, and I'm being like conservative and maintain an uptrend, more of a healthy uptrend, right? So there's just a lot of room for this thing to mean revert. We got above the second standard
Maintain
deviation
discipline
for the year,
regardless
and
of
we started
winning
to
or
hold
losing
beyond
streaks.
that. So the second standard deviation is at 4,100. We could pull back to 4,100 like without even trying. So I'm looking at gold short term. I did take a little short here somewhere pre-market. I forget where it was. It was just cracking into a new low. But now you see how it's settled into this little short-term grind. I'm not as much of a fan of that. You see where my kind of algo signals are. It's in everywhere we get a nice up little pullback. So I'm going to be looking for little small pullbacks to short some gold unless something really, really changes. And then I'll keep my eye on S&P as usual for scalps once we open up.
Yeah, I mean, I have not talked much about being bearish gold up until the last couple sessions, and that 4,400 mark was where Pax had talked about, where he said that's where the swing is complete, and I always look at his big picture levels. They're very, very good. And then I started looking at my stuff, and I'm like, okay, we've now had basically a triple top up there. We've now had, they say there's no such thing, but I in a market that as volatile as this is, when it can't push through it, and I see that rotation with the Bollinger Band starting to round out. It's just running out of gas is what I see, and I see big consolidation up here. And my stuff says, yeah, 39.46 is not out of the realm of possibility. And, you know,
Sure.
and it's like, and again, that's nothing. I agree with you. I mean, and so I wish day traders would spend more time looking at these other markets that you guys talked about, because I think everyone gets so caught up in the indexes. I don't think that the indexes have been the greatest trade, at least from my time frame for a while. And obviously I traded short term for a long period of time, so I'm pretty good at recognizing environments. If you're trading like Chris in trend trading, it's a great environment, right? If a lot of people that are looking
Trade
for
without
version
fear
traders
or
in
overconfidence.
equity indexes, not the easiest, right? And so there's not enough volatility for it. And so you really have to be, I think, more aligned with like Chris's style and that type of a market versus like somebody who's scalping all day, which you see a lot of young traders, newer traders doing. They're trying to catch both sides. There's probably a lot of other better markets out there for
Big trade.
you, and there's different risk profiles for them too. You've got the big gold, you've got the micro, you've got 1 ounce. Don't even get me started with him looking at corn today, which I think is great because, again, Merritt's also seasoned enough to be able to do that. I think you got to earn your way to getting into some other markets. You know, test them out, see how it goes. But there are other markets besides indexes, and I just wish that some traders would go beyond that. And I'm glad you guys, well, Chris pulled us into it, and then Merritt pulls up the corn chart. Of course he does. Epic. But before I let you guys go today, I want to quickly talk about to everybody in chat. First off, everybody in chat, thank you so much for being here with us this morning. Yesterday was the launch of the Arena Cup Challenge within the content creators. Jake Cap, he picked up 5K, squeaked out Stowe into the last 30 minutes. Stowe was leading, and then Jake Cap came in and ended up picking up 5K. And then you had our big prize pool for all the traders that got in, and you had some people that did really well that won $50,000 in cash prizes, but that was just qualifier 1. Remember, top 10% from there makes it to the championship, which is now on November 17th. Next up, we have qualifier 2, which is going to be coming up next Monday. We've got a huge lineup there. All the traders that are on NinjaTrader Live and some new ones are going to be in there qualifying, or not qualifying, competing for 5K of their own prize pool. And then you've got all of you guys that are going to be able to compete for $50,000 in cash prizes. And then
Always
qualifier
act from
3,
a position of
which is
self-discipline,
November 3rd,
accountability,
is the
and
same
confidence.
situation. Top 10% in all of them make it to the championship, where the winner gets $100,000. We're giving away $250,000 in cash prizes on Championship Monday, which is November 17th. Don't miss out. Click the link in the chat. It's free. It's sim. And you have a chance to win real money. I mean, let's face it. We're not going to be doing ones this big that often. So get in, get involved. And guys, I can't wait to see you guys in the competition. I know, listen, I can't wait. Merritt is going to be coming in, man. He is going to be juiced. He loves this stuff. He lives for this stuff. So it's going to be a lot of fun.
Crap to the chat. Be like,
oh,
it
for
sucks
sure.
for you guys. Only qualifier 3's open because that's the day I'm trading. So sorry about it.
You see it? Yeah, and I know. And Chris is that quiet assassin. He's going to come in, and boy, I can't wait to see it. It's going to be so much fun. Boys, again, so great to see you guys this past week. I'm still tired because I had so much fun. We laughed so hard. It was just an absolutely fabulous time. Thank you guys so much for being here with us today. Again, show my boys some love. Hit like and subscribe to the channel, and I will see you guys next week.
See you, brother. Take care.
All right, Ellie. Enjoy the rest of your week. Yo, yo.
Hey, man.
Glad your voice is
a
back.
quick little story, chat. So we had the big NinjaTrader event. If you guys have heard, you're probably sick of hearing about how much fun we had. But anyways, a little inside
Big
story.
trade.
My voice, you can still tell it's kind of messed up. My voice went out for the big Saturday night dinner. Oh, no, Friday night dinner. It went out completely on.
Trust yourself to
Like, I could
execute your
barely make
plan
any
under
focus
all
on
market
it at all.
conditions.
Mostly just- And it was loud, right? We got like 30-something people sitting around his dinner or whatnot. I was useless. Chris was sitting to my left. And I would try to get in on a conversation, right? It's tough sitting there and like you can't talk with people. I would whisper something in his ear to contribute to the conversation to his left. And he would say the worst things that I did not say to them, and he kept doing that to me all night. Never allow this man to translate for you, ever. He will wreck your life.
You needed help, and I provided what I think is a great service. I don't know.
Yeah, something like that, yeah. Oh, man.
No,
It was well played.
Actually, you would not believe the things that came out of his mouth that I had to translate. Okay?
I put him in that awkward position of saying those things.
But it was a great time.
It was. All right, man. Well, let's get after it.
Send it.
I mean, gold is moving.
Yeah, I wanna trade that. Well, I have to learn how to trade it for the competition. Yeah. Feel it
Accept
out.
full responsibility for every trade.
All right, guys. Morning to you all. Hello,
Morning,
Shab.
Cap.
Hello, Sab. Jim. Good to see you. Whispering sweet nothings for sure. That's what he was doing in my ear. We don't have to get into that. All right, let's see. Look, the main idea for me was a pullback into this 250s in NQ. We got that overnight, so I want to see what happens when we come back down to it, which we are doing that. I do have a swing on from yesterday in the swing account, which I entered right when we were breaking out of that daily wedge. No, my entry was an hourly breakout inside of that daily wedge breakout to help me manage risk better. So I'm up, how many points am I up right now? I'm up around 182 points right now. I did take partials already. I'm down to 1/4. Great trade.
Nice. The only problem with gold right now and corn is that on the weekly time frame, they've already rotated all the way across to some lower extremes. So it just gets to that point where, yes, because the higher time frames can crack and have a lot of room, right? A lot of reward on the risk reward kind of
Big trade.
asymmetry. That is a factor where when you start to get
Big trade.
to lower extremes on some more intermediate time frames,
Big trade.
you absolutely
Every moment in the market is unique.
at the very least, it needs to be in the back of your mind that, hey, there could be a much larger retracement than my kind of short-term trading is calling for, and I might have to be patient on that. If it starts to show up, right, you might just, it's like Deli talks about, just being contextually type of aware of the situation. Yes, higher time frames can crack and continue to crack, and we can continue to press extremes on weekly DVA. However, more times than not, weekly DVA, when we get extended, it needs to kind of find some form of a healthy pullback and whatnot. So, but gold is a market in particular. It's similar to Nasdaq, right? It's a little thinner, it's a little quicker moving. It can get in extremes and it can stay at extremes. And so there's, speaking of multi-markets, there's also that personality traits, if you will, that you should know about start to get to know of any market you're trading. Morning, Joe.
Hey. Question for you on gold. Even, this is on indices right here. Even on big like pullbacks, like for example, the one that 2 Fridays ago, the indices will most likely revert back up to either get some sort of relief bounce, or just create a big old fell breakdown, which that's what it turned into, right? Sort of like, I feel like that
V bottoms, yeah.
Yeah, because of the equities market, it sort of has that because there's a lot of always support from the market.
Long bias.
Yep. Find that the same in gold? Like, does it have the same sort of characteristics in that?
I don't think so. No, I think it's easy to
Keep a neutral mindset.
get
Accept both
a little
wins
recency
and
bias
losses equally.
with what gold has done, in the past couple months, and so people are like, oh yeah, just BTFD or whatever. Zoom out for a while, right? Go look at some long-term charts. Gold and other commodities like crude oil and whatnot, they can go on these wild runs, but they spend a whole lot more time ranging and probing extremes and coming back and things like that. Again, they can get into periods of wildness and extremes, but no, there isn't that
Bias check.
inherent
What is the current market outlook? Are you trading what is?
upward direct, like stocks go up, right? Like the what's it called? Selection bias, not or survivorship bias,
Okay.
right? In stocks is if a company's not doing well, it's going to pull out of the S&P, and a company that's doing well is going to come in, right? So there's definitely an edge, if you will, long term, in being long equity indexes. That's not the case with more of your raw commodities. We might get someone like Craig or Tracy, and please, correct me if you think I'm wrong. I'd love nothing more than to learn. But that is my take for kind of your more raw commodities. There's just trends. It's supply demand. It's, in this case, mass hysteria of what's going on with the world with gold and why are can't think of the name of all the government agency reserves, banks, whatever you call them, are buying up gold. All these things. It'll be a news story 6 months from now.
I pay myself as the
all of a
market
sudden,
makes money available
It's
to
not
me.
hard to imagine. Oh, well, now it doesn't make sense to hold gold because of some new development in the crypto space. That is the new official store of value, and it's undeniable. Right now, that's still a bet on the future. Right? Probably more than you asked for, buddy.
Yeah, I started looking at corn.
The little red circles and the green, the arrows are most important. I know they're hard to see, but this is a red arrow. This is a green arrow. Green arrow. Green arrow. Green arrow. Red arrow. Right, and then the circles are a little bit more common, right? Circle, 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 circle. Then you get an arrow. That is just an algorithm that I coded up, and is a kind of a mix-up of a couple of different ways of seeing what I call
Big trade.
rhythm and momentum shifts and whatnot in a market. And so, oftentimes, as you see me trade on these sessions, it's not that I'm leaning on that indicator, that algo. It's almost more of an experimental / sanity check. Central bankers, thank you, Amir. A lot of times you'll see my entries line up with those algorithmic plots.
Minus
Just
one
because
touch.
That algo is a little bit of a brain dump for me, and so I'm trading from my brain here discretionarily, and a lot of times they line up. But it's not something I'm leaning on as a part of my process or something. It's experimental.
All right, so we're
An edge is
bouncing here,
nothing
but it
more
didn't
than
really
an
come down to
indication
that
of a
250
higher
zone that I was
probability
looking
of
for in
one thing
NQ, so
happening
no
over another.
reversal entry for me. ES did come down to 68 and is bouncing, or it did bounce. So, you know, that one did test that support area. But I'm trading NQ here, and so far we're inside a multi 4-hour range, 4-hour candle range. But if we can continue to hold this 250s area, I'm going to be looking for higher prices.
I assume gold is gonna press these lows here. It's kind of vulnerable to stop run in both directions, though, right? You've got these 3 now lows stacked in right here. You've got this little double top right here, so a little opening volatility with equities opening. Both of those areas are vulnerable. I'd love to see a move higher and a little failure to get on board with the short to look for new lows.
All right, so NQ's now into that 260s area. Let's see if we can hold or we are breaking through that.
Keep in mind, for those of you
There is a random
trading,
distribution between wins and losses for any given set of variables
S&P at
that
least.
define an
Check
edge.
the Nasdaq real quick. I barely look at the Nasdaq anymore ever since I broke up with it. Yeah, it looks pretty much the same. This is something you've seen in particular on several of Chris and I's Tuesday streams here, where you have a quiet overnight market in an index, such as the S&P, which has specifically tested the high and the low of the afternoon distribution and value area from the prior day, for those of you who understand profiling. And now we're opening up smack dab in the middle of that fat distribution. That is, you look up the definition of a boring open, potential for a little bit of chop and a lack of direction. That's the picture next to it in the dictionary right there. So that's what you have today in the S&P.
All right, we have a little bit of divergence here between ES and NQ. ES is just stuck sideways. NQ is weaker. We're seeing a little bit of weakness in the semi space. Mags are doing not that bad. Seeing a lift here as we approach earnings.
I think they're gonna debut a new, like, pretty cool sounding indicator for the stream today, right? Do I have that right? After the initial balance, they're gonna show it.
Yes.
Always
Yeah,
act from
so
a
it's like
position
a-
of
Kind of like a
self-discipline,
breadth indicator,
accountability, and
my
confidence.
understanding, guys, it's going to be kind of what a lot of the top stocks are doing, and a couple of indications of their strength or weakness, and then kind of give a overall score. So that could be a really value-added tool. That's pretty cool.
All right, so ES is stronger here. NQ is seeing a potential bounce. I did not take out that overnight low. I would have wanted it to do that. Take out some stops that are there and then possibly bounce, but I'm watching here for a potential reversal.
VIONK, you'll have to rephrase the question. I don't know what market you're talking about. I understand the second part of the question, but to clarify.
There's no lower high here for an entry for me on this possible reversal idea. Let's see, 288, 255, it is 30 points. Yes, looks much better.
Sturdy gentlemen, I think you're seeing trading halted because there is no arena challenge today. So
Plus one
probably
touch.
you might be able to log in, but there's no trading allowed yet.
Trade without fear or overconfidence.
Definitely gonna scalp some gold, but man, it's just, other than that daily bar chart, it's just such a uncomfortable trade location to be short. But I know that there could be a lot more energy to the downside, so it goes back to what I said earlier. Keep it in the back of your mind that it's a less than stellar trade location, and lean on the short term until you see something really call you off.
Dude, need a phone upgrade but don't want to break the bank?
Well, that's a big
Cruise
candle.
into Saks and upgrade your phone today.
For what were you looking at?
Gold.
Okay. It's bouncing?
Mm-hmm.
We're shorting the bounce? I'll short that. See, that's why I was asking if it trades like the indices, because I want to short this potential top, but is it going to bounce back up like what the indices do?
A lot of times
Accept
when I
full
see a
responsibility
candle
for
that
every trade.
has a range that is, and it's hard to see on this volume-based chart here, but if we were to look like, I'll switch it to a 3-minute chart, and you'll see the significance of this candle. Here we go. Right, so you have one candle essentially that is engulfing, you know, the past 25 candles or something, right? So a lot of times when I see a candle like that, unless it's at the tail end of a rotation, like that's a little bit different. But when it's a new counter rotation compared to the direction that we've been going, that's too strong a momentum for me to just stick my neck out and fade. I'll wait for something a little more what I call complex to set up. I think I'm going to change my candle style when I change the time frame. And my candle width.
Big trade.
EQ's doing a whole lot of nothing. ES is moving higher. Probably financials are strong.
Witness my wrath.
I'm looking at a 5-minute reversal here. If we can get back above this current 5-minute candle for my 90-minute reversal setup. So far we're just consolidating in here. So if we trigger above this prior 5-minute candle, I'll get long. But I'm still waiting to see if we come back down then. maybe do take out that overnight
Minus
low,
one
and
touch.
maybe trigger a failed breakdown.
Maintain
If this
discipline
overnight low
regardless
to
of
50s
winning
area
or
one
losing
holds,
streaks.
and the next area of support will be 180s, which is prior week highs.
George, I don't believe Chris has put on a position yet.
No, I did. I closed it. I'm waiting for a.
Winter, shield me.
It's funny, George.
Shorted gold.
I'm going to take off the limit order, and I'm going to wait to see if we do take out that London low. Well, that's a good
Minus two
rejection
touch.
in gold.
Big trade.
All right, we now have new lows in NQ. If we can't hold
Bias
here,
check-in.
then we're
What is the
probably
current
gonna
market?
move
Big
lower,
trade.
but
Are you trading what is?
I'm not looking to short this as I'm looking about the pullback.
Took a scale.
Big trade.
Maintain discipline regardless of winning or losing streaks.
I'm still fairly uncomfortable with the
Big trade.
strength shown on that time-based candle. I do not like the look of that 3-minute candle, but this is a classic imbalance pullback trade. And again, the thesis is that it's an uncomfortable trade location, but gold on some of the
Big
biggest
trade.
time frames
Big trade.
has a lot of energy yet to release to the downside. So I'm trading my process. As you can see, the algo fired off the signal there, right around the right. Shorted as well. Another day, another dollar.
All right,
The
so
low of day's vulnerable, so we'll watch for that. Sorry, Chris, what were you saying?
I was just going to say that we do have NQ moving lower here. If there is a divergence, ES is still holding. New lows for gold, hopefully. How much is
Tremble before my wrath.
gold per point or tick? So,
It's $10 a tick.
There is a random
Moves in
distribution between
0.1
wins and
increments.
losses for any given set of variables that define an edge.
all right, so ES tested that 65 area again. ES so far is in a range. NQ, can we now potentially see the failed breakdown here? I'll need acceptance here to show that price is not going to want to reclaim the 60s, and then it'll push back down.
Big trade.
Like Shaper's War.
Pretty weak.
Who? Gold is more skittish than normal. It can be a very
Perceive what the market is
herky
offering from
jerky
its
kind of
neutral
market,
perspective.
and it is herky jerky today. That's a technical term.
Proprietary.
Proprietary.
Minus one
Proprietary
touch.
technical term. It's a PTT. All right, let's push them lows. I don't know why I'm talking like that. I'm sorry.
That. Bouncing hard here. Let's see if we can potentially trigger this failed breakdown. We'll be looking for a long here. Because other than this, we'll need acceptance under this 250s, 260s to then trigger a breakdown lower. Semiconductors are very weak.
You guys ready for this washout in gold? Watch it. Here it comes. Ready? Here it comes.
Close. Look at that.
Look at the delta. There it is. Let's clap. Thank you. Come again.
You're out? You're still holding.
I'm out.
Always act from a position of self-discipline, accountability, and confidence.
There's a difference between how I manage positions at a very uncomfortable intermediate term trade location versus if I were to have secured a really great NADRO based, contextual trade location. Then that's a time where you leave a runner on and you know, all the stuff that all these little pieces I've been putting together this morning and talking about it.
Minus 2 touch.
What do I call it as acceptance? To me, it's a structure that price forms. It's typically a multi-hour wedge structure that proves that, for example, if we were to form acceptance down here below 260s and NQ, it'll prove that buyers cannot lift it back above
Big trade.
260s. Every bounce attempt will be rejected, and in that sort of negotiation between the lows and the highs of this back and forth here, the technical structure becomes a wedge, and then I use that to manage risk on a potential move away from this zone that we're forming acceptance at. So if it's bearish, I'll look to trade the wedge breakdown to help me manage risk. Merit may have a different answer for that, but I just found that it usually, when we are not bouncing from a support zone like we've been here and we break below it, and we are going to have a sustainable move away from this zone that will create a contraction here, and then a new trend from this contraction will lead to a sustainable move lower. I need to wait for that.
There is a random distribution between wins and losses for any given set of variables that define an edge.
Yeah, we both use that term acceptance. When I talk about NADRO, N-A-D-R-O, the A is acceptance. It's a critical element in a top-down strategy. approach.
Big trade.
I don't use wedges per se and kind of have that way of doing it, but at the end of the day, it's a similar thing. We're looking for a defined way of saying price is above or below a reference in question, right? A key level, a line in the sand, whatever it is for you, rather than just saying, oh yeah, we're now trading above it, so it's above it, or we're now below it, so it's below it. We make it a little more complex and we slow it down with our definition. You look for more than just price trading above it by a tick or price closing on your time frame above it, right? All this kind of stuff. We have our own clear definitions of what it means for price to accept above an area or below an area. And that's important because it keeps us from getting. The reason I developed it's funny, the term acceptance I think came originally from profiling people, right? I think that's where that term sparked, back in the 80s or whatnot. And it's funny, it must have been subconscious for me, but when I coined the term acceptance as it relates to like rhythm and price action beyond a reference, I wasn't thinking in profiling terms at all.
Stay completely focused on the now moment opportunity flow.
And now I feel like everyone, is using some form of phrase acceptance in their trading. It's interesting. I don't know if I played a role in that with Nadro. Maybe that's facetious of me.
Get out of here.
Yeah, but it's certainly something that has caught on, we'll say, compared to when I came out with Nadro in what, 2015 or 16 at SMB with that SMB Futures Foundation course.
This is what I heard. Hey guys, I'm married. I create the words that you speak. When you say that, you coined the term acceptance. You do not create all the words, okay, man? All right, ES took out that overnight low. NQ both down here. Can we finally see this failed breakdown? I don't have the 9MA reversal here for me. It needs to be I mean, this bounce here from here to here moved up all the way into the 2050 EMA cloud area here in red. That's not my entry sort of area that I'm looking for. I need the lower high to be into the 9MA down here, reject a little bit, and then trigger that reversal with the reclaim of this lower high, right? So if the potential lower high is in all the way up here into the 2050 EMA, that invalidates my potential reversal entry, because part of the move that I want to capture in the reversal is into that next moving area of resistance, which is the 50 EMA. But if that entry is now close to the 50 EMA, you can imagine that my risk to reward is not going to be
I completely accept the risk,
favorable
or I am
on
willing
my
to let go of
side
the
of the
trade.
trade, and therefore if it does reverse from here, I have to skip it because I can't take that trade. But what I found is that most of the time when price does bounce all the way up into the 50 EMA and rejects, it's going to continue lower. We're just gonna have to wait and see.
Minus
Great.
one touch.
And you can see that we are rejecting pretty hard here. So that's something eventually that as you build your system and you spend time trading that, you develop new insights around your entries, right? You start to understand how price moves before your entry, after your entry, how it behaves, and eventually you start putting all these together and you say, oh, hey, a successful reversal looks like this 80% of the time. So can I add in an additional rule there? And over time, does that maybe help me remove stops more, or helps me make more? Does it increase my positive expectancy? Does it increase my return profile, right? This is the feedback loop that you're stuck in, and you just continue to iterate and nonstop until you develop more rules that help you overall. So now that we rejected here, can we form, I need a sort of wedge structure here to confirm again that we're not gonna reverse, and then we move forward.
Trust yourself to execute your plan under all market conditions.
Yeah, Jens, you always want to be cognizant of the level of volatility, aka like we don't have to get fancy by even talking about volatility. How far away is your stop need to be, right? You always want to kind of adjust position sizing for that. If you buy into the philosophy that I buy into, which is we never know what's going to happen next. High conviction plays, low conviction plays.
Bias check-in. What is the current market outlook? Are you
Minus
trading
two
what is?
touch. We're short-term technical traders. It's not that big of a deal. So I like to keep my risk fairly consistent. And the way to do that is to attempt to adjust your position size based on how far away your stop's going to be.
All right, so hopefully we see prior week highs here in NQ.
Big trade.
And then this next higher low that we put in, I'll probably move my stop up in my swing.
You don't need to know what is going to happen next to make money.
Big trade.
Tremble before my wrath.
Yes,
Do I
can't
reset
quite
Delta?
break
Do
What's
I
that?
reset Delta at the RTH start? No, I don't.
My screen is up, Tom. Can you not see my screen?
We see it. Let's see, a couple questions. Leo, good time to. When do I consider it a good time to scale into a trade? Add. When I secure a really good NADRO-based, contextual trade location, which this gold trade wasn't, and I get another setup that I would essentially enter into the trade if I was not already in the trade. Those are places where I'll look to add, and I treat it totally independent in terms of it'll have its own stop. I will 99% of the time scale out of the add as if it was a
Big
brand new
trade.
position, things like that, and it'll just slightly increase my core position after the scaling out of the ad. So I kind of treat
Keep a
it pretty
neutral
independent.
mindset. Accept both wins and losses equally.
Yeah, Kingfisher, that guy is someone who took my course and literally just copied it and sells it. That's what that is.
Oh man, bummer.
A lot of times he didn't even change the screenshots and stuff like that. It's just like the same. what was the other question here? Oh, why don't I trade the NQ? I mean, I do, but the past month or two, I found some reliability, let's call it. I'm not going to talk about the details because it's edge. But I found some reliability in the tools that I use and whatnot that were working better in the S&P than the Nasdaq. So I had been exclusively Nasdaq in terms of scalping indices, when I was applying that tactic for a couple years. And so a couple months ago, I went back to the S&P because of that. Gold is unable to bounce. Let's comment on that, right? So we shorted this right here, came out into the new low, and what would be normal, you see the buyers start to come back in here off the low. You see my algo firing off potential swing low signals. What would be normal would be to see some type of a bounce. But this market is kind of so bearish, it's been unable to do that for a number of bars here. So just a little commentary, not a trade opportunity, but commentary.
An edge is nothing more than an indication of a higher probability of one thing happening over another.
Wouldn't be surprised to see it. Yep. Never mind. Too late.
Bear witness to winter's wrath.
Sellers are in control of the tape in the S&P. We can say that for sure. That market testing for the profile here. Testing just below that value area, that big distribution I was talking about from yesterday. So we're testing the lower edge of that, those extremes. We'll be telling if we can kind of hold underneath this area or if that's just a probe and we start to snap back in. If we start to hold back into this area, then weak highs from yesterday would be on the table.
Big trade.
Before my wrath.
I hate when people compare some year, right? I don't care if it's 1999 or last year or whatever, and they overlay this year's chart so far against an old year's chart and try to imply that it's going to follow past movement. To me, that's just
Maintain discipline regardless of winning
people
or
love
losing
to point
streaks.
them out when they match up, and then there's not a lot of follow-up on those charts after that one.
Big trade.
Now you want to put together something robust, right? What has been, the movement measured over the past 10 years, right? That
Big
brings
trade.
us into the realm of actual data for seasonality and things like that. And by all means, that can be some value add if you want to apply that to your trading. That's perfectly fine. Speaking of what Credelli and I were talking about earlier this morning about trading other markets, there are other markets, right? I know that we have, what is it, sell in May, or is it August, or something like that in indices, and then Santa Claus rally, right? A little bit of seasonality there. But there are other markets, namely agricultural products and whatnot, who have strong seasonality, not just mild, slight seasonality like indices, because of the sun, right? Because of
-1 touch.
the tilt of the Earth's axis, right? There's a time to plant crops. There's a time to harvest crops. There is a seasonality to the whole cycle of those things. And because of that, Mark says, stop, man, just stop. Because of that, there is a stronger seasonality to those markets. There's some really good tools out there you can look up to help you get an understanding of seasonality.
Maintain discipline regardless of winning or losing streaks.
Yeah, that's interesting, Adrian. I think it's real. I think that obviously there's variance. You can have outlier years. You can have years that don't correlate to the seasonal pattern. But I would disagree that it's not real.
I'm long ES instead of NQ just because it's been stronger.
Okay.
We triggered this 90-minute reversal on the 2-minute that I was looking for. We took out that London's low. And then I look at SPY and Q. SPY just back tested that prior week high. So, and into that last low, we did have a divergence here. We had multiple divergences showing up.
Nice. It was a well-timed entry. It was weekly VWAP on my charts, and it was that probe below yesterday's value. It was a good little spot.
Let's see if we can hold here. Now I need to reclaim the 68 zone.
Upon the request of your mother, Neil.
Whoa, what?
It's just a look she likes.
Know that consistency comes from your mental framework, not trading strategies.
If ES cannot reclaim 68, then we're now at this point we can create some acceptance here, a wedge, and then that can be what creates a sustainable move lower back to 43, 67, 43. If we do hold and reclaim 68 here, then we can get a bounce back up to maybe overnight highs. But we'll see. NQ remains weak. I mean, that one's still below the overnight low. I don't quite want to trade that. Oh, gold put in a nice little bouncer, but maybe new low again.
Could be. Not enough of a bounce for me. You know, more of a little blip. I need to see something more substantial, but I understand it's been so weak. Obviously, if we were to throw up like a volume profile of this area, you would have this lower edge right here, right? And then you'd have this right there. And so this is a little LVN zone, which made sense for the retest. But again, I don't like where this market is, like on other charts. So I'm going to be, like I was, conservative, with this entry. It was a more substantial pullback. It was near the 1 standard deviation, which is a place I like to trade from during trends. So for that reason, I'm out.
Big trade.
Yeah, it doesn't look like it will want to hold here.
Know that
We'll see.
consistency
I'll keep
comes
my
from your
stop at the
mental
lows.
framework, not trading
This is
strategies.
my trade idea here for this area. I'll just wait to see what the outcome is.
You picked the absolute best, just the absolute best spot to get long the S&P that you possibly could have. the entire
-1
since
touch.
the close yesterday. Like you did, it's just such a good spot to put that on. Take
He
notes,
said it.
guys.
He said it, guys.
Yep.
All right. He taught me a lot this weekend. Okay. All he was doing, yelling in my ear when he lost his voice, was
Whispering, gently
process,
whispering.
process, process. Okay, that's how he lost his voice. He was just yelling that into my ear. So I woke up to that and I was just committed to the process.
We use both, Kingfisher. It's a good question, you know, between some of the VWAP based stuff and the structural profile stuff. You put it all together. You look for confluence, you know, you look for multiple time frames that are in agreement.
Wow.
And you pay really close attention where they aren't, and that's how you start to put together a narrative, a thesis.
Bias check-in. What is the current market outlook? Are you trading what is?
We do need NQ to bounce
Big trade.
here and reclaim that 250s, 260s. If we cannot, then it may not work. So what I'm going to do is I'm going to bring my first partial down to 1R.
Maintain discipline regardless of winning or losing streaks.
Big trade.
Corn's at low of day, by the way. I just want to call that out.
Oh, for sure, I'll max short that. Ma, meatloaf. Yeah, he was yelling that too.
Tracy, Ma, the meatloaf. More for you and me, right?
Yeah. So far, NQ is it's doing a little bit of this wedge structure that I talked about here. So it's developing that structure that, you know, can lead to a breakdown here and a sustainable trend lower. Means that we won't be able to reclaim this 260s. We'll push down and maybe go for that prior week high test. But ES is looking a little bit much stronger. It did trigger that 90-minute reversal. It's just doing better overall. A little bit of divergence here. We can see a little bit of a pop higher and finally take partials off, and then it'll be a risk-free trade. Do not hold your breath.
I completely accept the risk, or I am willing to let go of the trade.
That's pretty good, Sean.
Look at that. NQ still can't reclaim that overnight low. So weak versus ES. ES so close to my partial too.
I've always meant to ask you, those little beeps that we hear in the background, is that some type of a news feed that you have? What is that?
No, they are alarms.
Is your pacemaker?
It's for my kidney. If you are interested to know, I'm sick, so thanks for the reminder. No, but it's for individual stocks, since you know, I gotta keep eyes on a lot of things. They just help me stay alert when there's a possible when my setup is
it's
there.
a must. If you're trying to follow a bunch of names, alerts are a must because the human eye and brain can only do so much.
Yeah. I need it.
So is it's custom alerts that you set when you want to be aware of like price levels and names and stuff? Okay.
Yes, pretty much.
Have you ever used that what's it called? Trade ideas? Have you ever used that?
What do you mean? What is
I
that?
pay myself as the market makes
service.
money
I figured you've
available
heard
to
of
me.
it. I have no, association or anything like that. I'm just asking. I know I've seen people use it. Trade ideas.
No, never heard of it. For stocks, like swing trading.
Yeah, man, you should check it out. I've heard good things.
Oh. By who? Oh, like a scanner?
Yeah, I think it can do a lot of like.
Oh, it's a scanning
custom
platform.
stuff, though. It's not just like a generic scanner where you can like filter by, earnings and blah blah blah. It's you can kind of customize stuff. I believe I could have that wrong. When I traded stocks in college before I switched to futures, what was that
Big trade.
platform I used?
Big trade.
It was like really modular. You could snap things around. I love
like
that
that.
platform. What'd you say?
I like that.
Help me out, chat. What's that stock trading platform where it's like they were the first people ever where you could like drag and drop things and like really like we're talking old school here.
Drag things? Like on the chart?
Napster. Nobody's named it yet.
My first one was Trader King.
Never heard of that.
That was like my first platform.
I pay myself
All right,
as the
I'm gonna have to
market
look it
makes
up
money
myself.
available to me.
All right, I got filled here at 1R.
That's it.
What is it?
Bragg City got it. TC 2000. Telechart 2000.
Oh, that?
Mm-hmm.
Yeah, that's still popular in the swing trading world.
Big trade.
Yeah. I think they do a good job. Yeah.
Yeah. All right, so I took half off at 1R. Typically, I want to wait for 1.5R, but NQ was struggling at this overnight low. But good to see that we're reclaiming that. So I brought down my partial exit to 1R. I'm just gonna hold this now for the rest, hopefully for the rest of the day. Why? Because I am looking to capture a higher time frame trend. And what I did here was position myself in a lower time frame entry. So my idea here is that if we go back to the 4-hour trade plan here for ES, is that if we can hold and put in a 4-hour higher low, what can take place? Well, we can move up eventually to put in a new 4-hour high, right? That can be many, many points above. It can work, it may not work, but I've designed my strategy for that, where I want to risk as little as possible and then just trail the trend for multiple days if possible, because, and I'm only applying in that here because yesterday was day one of that daily consolidation breakout, right? Daily wedge breakout,
trade.
box
One touch.
breakout, whatever we want to call it. It was day one. So if on day two, I am in a intraday time frame buying the pullback of that daily candle, I want to ride the follow through of that daily candle, essentially risk 6 points in ES to make 30 points maybe. They do not all work, but over time I make more.
Always
doing
act from
so,
a
and
position of
I have to do
self-discipline,
that.
accountability, and confidence.
And then I also have my swing NQ from 25,095. I had 36 micros. I have 8 micros left, and I'm just gonna ride that with the stop at break even and see if I can ride that to all-time highs. So there's nothing much for me to do here.
Beautiful.
I'll put another partial exit at 4R, but some of you guys will say, like sometimes what will happen, what you guys will see me do is it'll move up to like maybe 3R and it'll come back down all the way back down. And you guys are like, move your stop up, move your stop up. No, because I'm trying to capture a multi-day trend. Why would I move my stop up on a lower time frame to get me out of that possible position? But at the same time, I have to be okay with getting stopped out on the rest of the trade, right?
How about the fact that I've taken 80% of the pit session range out of gold, and you've taken 85% of the pit session range of the S&P.
Big trade.
Hey,
Just tag teaming them, man.
I love that for us.
We're pretty big in Japan. I don't know if you knew that.
Yep. And my main, by the way, guys, this is we are gonna get an edge report update from Jim here in a bit.
Yeah, he's gonna introduce the new
yeah.
Think in
new,
probabilities,
sentiment
not
indicator.
certainties.
And I forgot what I was gonna say.
We'll stop run through 78s there for you.
Yeah, so again, guys, the main trade idea for today was if we could see a failed breakdown versus below the overnight low and then reverse back up. What are we doing now? Right? We did do exactly that. We came back down, we triggered below the overnight low for both ES and NQ. So scenario 1 is alive here for both ES and NQ. Now, we're back up into that overnight resistance in ES. NQ still remains weak, nowhere near that overnight high. But for ES, if we can hold up here and eventually form acceptance into 77.80, then we can push up higher to 67.93. But at this point, I am now an hourly trend trader, right? So I'm not looking to do anything else.
Just to help the chat more with that, with the knowledge you're dropping on them right there, just to say it in another way to help them. Pretty much all good traders I know who
Big trade.
hold what I call a core position, right, or a runner or something. There's a transition point in the trade where they stop staring at the stuff, the indicators, the tools, the timeframes that got them into the trade. It's no longer relevant for managing that position. And there is magic in that, absolute magic. You move away from that, you start focusing on typically higher time frame things, other references, other indicators, other tools, and that's how you manage the position. Because I can promise you, if you're gonna keep staring at the dome and the order flow and the tape and blah, 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 and the 1 minute chart, you're going to talk yourself into exiting that position. Because there's gonna be real valid signals on those timeframes against your position, and they're gonna shake you out.
Yep.
That's why. That's the magic.
Question from Logan: do I take shorts? How do I take shorts if I'm holding a swing position? I will, because again, we just broke out of a daily consolidation. So to me, that means that from day 1 to day 3, the momentum is higher. Will I take shorts in that scenario? Probably not. Only because I see that as counter trend. I'll miss breakdowns, obviously, and I'm okay with that. I will only take shorts if we're ideally maybe in a range like we were in the last week, maybe week and a half, or below the daily 9MA. And I'll look at that by waiting for acceptance or a wedge at support that confirms we're not reversing from that. buying attempts are being rejected, and then the breakdown of that structure is where I look to get short. Something like here.
Chris trading boxes. It's that time in the stream where we have to remind the chat.
Oh wow!
That they just don't like what we're doing. They don't move the mouse. They don't click the thumbs up.
Yeah, guys, help us out here. Help out the network. Share it with your friends. You know, knock on your neighbors. Hey guys, have you guys heard of Ninja Trader?
Accept full responsibility
No? Whoa.
for every trade.
Have you seen the Black Boxes episode on Tuesdays?
Yeah.
-1 touch.
Share with everybody. Share it, like it, subscribe, do all those things.
I know my mother-in-law watches sometimes.
Oh, really?
Yep.
She's like, oh, how is my Christmas gift gonna look like this year?
Bias check-in. What is the current market outlook? Are you trading what is?
Thank you, remain sweet. Look at that rejection. What you want now in ES here is you want a potential higher low against the low that we put in. And now it can just, you know, move around here, do whatever it wants, figure itself out like Mary did in college, and eventually just
Oh, that's good. That was good.
and just do its thing, you know? But if it stops me out, it stops me out. It is what it is.
That's the kind of stuff he was doing to me. When I'd whisper to him at dinner. That's what he would turn to the next guy and say.
Big trade. Big trade.
Did you get the chance to talk to Craig much?
No. You did?
I was closer to him at dinner, and
You didn't have a translator, huh?
well, I had Tendler to my right.
Big trade.
and
-2
he was actually
touch.
doing a good job, you know.
Mm.
Maybe it's because he's like, I guess not ESL or whatever, so he like actually can like do a better job of translating
sure.
English to English, you know.
Big
Hard
trade.
for me.
But no, Craig is like, wow, wow. His understanding of just like the interplay of all the like the fundamental pieces and what's going on globally is very impressive.
He trades futures or equities, right?
I believe he trades some crypto, some equities. I'm sure he'll do stuff in futures as he sees fit. But yeah, he's kind of like a global macro.
Okay.
So he'll probably get into
He does it all.
anything. Yeah.
Hey guys, how you doing?
Jim.
Jimmy Kegs.
Wow, it was great meeting you guys down in Naples. You know, a lot of times you know somebody from their online personality and they don't live up to the hype when you meet them in person. Not you two guys. You were awesome, man. I loved hanging with you.
Right back at you, man.
Likewise.
Well, I'm popping in. We're
Trade without
introducing,
fear or
something new
overconfidence.
to the stream. This is a edgeful statistic. It's The overall
trade.
daily bias indicator, and you'll see it up at the top of your screen
Big trade.
right there, and we're going to be posting that every once in a while on the stream. And the daily bias indicator tracks the top
Big trade.
15 weighted stocks in the S&P and Nasdaq to give traders a clear read on overall market sentiment. And it's powered by 4 Edgeful reports: the opening candle continuation report, the initial balance report, the IB by rejection report, and the previous day's range. And all of these calculations should be done locked in by 10:30 East Coast time. And the idea, anyway, at least for the way I'm thinking about this, is if I see something that's very bullish up there, green bar going all the way across, probably going to be looking for places to get long, follow the trend. Very bearish, probably looking for places to get short, not fighting the tape. And then neutral, while the big names are not aligned, expect a little chop and sideways action. So we're going to be talking about this more and more, and I'll go into a little bit more detail on the Edge report in a couple of minutes here at the end of the morning stream, but it's going to be super handy. So right there on your screen, you'll see it's color-coded. That's it. That is the Edgeful. Remember, Edgeful has 1 L, guys, too. There's not 2 L's. It's Edgeful, EDGEFUL. If you want to see some of their stats, I use them every day. They're awesome. So just wanted to pop in and introduce that to everybody on the stream.
Sweet.
Awesome. Thanks, Jim.
All right. Good luck, boys, in the rest of the morning.
Yeah,
Thanks,
you go
man.
and enjoy your island now.
Enjoy that third mojito, Jim.
Oh, great.
Nice.
Looking forward to it. I inspire people, right? So,
Yeah. Yeah.
what can I say? All right, so it looks like it's not going to hold here. So I'll probably get stopped out in the other half and it'll be a scratch trade. And that's okay. I'll just wait for lower prices and buy again. NQ can come down to prior week high here and see what happens.
S&P just went high enough to run those stops at 78.
Big trade.
And then just absolute character change on the tape, all selling since. Wow. I don't care how it shakes out. That was a great entry, great trade.
I mean, today's
I wouldn't call it dead in the water, though, you know? It makes sense, you know, from a theoretical perspective every single time that if we have that distribution, right, we trade it down to the lower edge, got the failure, which is where you entered long. Yeah, okay, so we rotated up, not quite to the upper edge, right? So we got to here, took out some stops. And then we do this, and it's like, okay, well, that doesn't feel good, but I can tell you that most times when a market fails out of a lower edge of a distribution, it needs to retest that lower edge. It needs to firm it up and make sure to confirm, yes, we are.
I act on my
pulling back
edges
inside
without
value.
reservation or
So,
hesitation.
I'm telling you, man, I've seen a lot of really good trades where from here to here feels really, really bad when it comes all the way back, you know, taking most of what was kind of this perfect run. But some of my best trades of all time have done that and then done a lot more. And I'm sure you have the same experience. You know, you're not freaking out over this. You're not over managing anything. Or are you freaking out? Are you freaking out?
-1 touch.
Are you talking to me? Sorry, my ESL, like you brought up, is acting up. I'm not figuring it out. Is that what you asked? No?
I feel like it was good for us
Big
to meet in
trade.
person because we there's like an additional layer of kind of like looseness and fun, you know, versus like, you know, a little more a little more respectful and everything. Now we're just going to be just dogging each other, and I'm here for it. I think the chat is too.
Agreed. We got gold, man. I should be short gold too. I need to trade that thing. I'm gonna start trading it so I can beat you on the day of competition. And we can trade euro, huh? Do you trade euro?
Oh yeah, that was my that was the reason I got into futures. Was I was trading, you know, FX, and then I was going to trade some outside capital, and so I went over to the futures markets to do it in a more, you know, central exchange regulated environment.
Yeah.
The M6E, Tom. Wait, is that right? Is that the micro future? I think so. You guys are dogging me about that acceptance terminology. We're gonna have to go get on like the Wayback Machine, right? Pre-2014, who was using the term acceptance? Who's got two thumbs and was using the term acceptance? This guy.
All right, so ES is bouncing back up. Like I said, like you just had to give it time to figure itself out. Like someone we know, but as long as it can continue to do so, it eventually reaches a point in time where it says, "Hey, I'm a grown up and I'm ready to go up higher," right? So we're just gonna keep letting this dance around here and then see if we lift higher.
Acceptance of price in finance literally goes back to the 12th century. That's what Jim Scalpert says. Well, you know, similar to who said they were short?
Perceive
White
what the
noise.
market is offering from its neutral perspective.
Similar to Chris's long, if I flip it over to S&P. From here, this short is not quite as good, but it's really, really good, right? We've established a range. It's not, it didn't run the stops. The short, the move lower ran a lot of stops, which is good. This one is not as good. It ran these like interior stops, as I call them. But that's absolutely a fine place to be short. Both of those trades can do well.
Look, all that, I'll bring up SPY over here, which is what I also look at. All that SPY is currently doing is consolidating above prior week's highs. That low that we bought was exactly that test of it. This is just a correction through time. As long as we can continue holding here, based on the higher time frame breakout that we've had, this to me tells me higher. So from a swing trading perspective, I want to buy pullbacks into support, pay myself for it, or take the risk off by taking half off, and then just trailing the rest. And I try and do that consistently over time, and eventually I just have, you know, positions and trends. But yes, SPY is not doing anything wrong. Now, what we need up here is a little bit of acceptance, meaning we need a small consolidation up here near, what is that? 67, 78-ish maybe a little bit of a consolidation here to show that sellers are not able to drive it back down again, like in this rejection here about 15 minutes ago. And if so, that can push up higher to this 93 zone where I have my next partial area, and we'll see if that gets hit. It's really good.
Gold with the largest intraday range. My chart only goes back to 2019, but it is by far the largest Globex range in my entire data set going back to 2019.
Bias check-in. What is the current market outlook? Are you trading what is?
Mark, pretty simple, bearish read and coming off of a yearly parabolic type of move. So there's,
I act on my
as I've
edges
been saying
without
for weeks,
reservation
the
or
potential for
hesitation.
this type of day we're seeing here and some continuation most likely. Remember when I was talking to Credelli, we were talking about how we could get to 4,100 where the +2 standard deviation was without even sneezing on it. Here we are. But anyways, to answer Mark's question, yeah, it's massive overextension on the yearly with room to the downside. Other time frames breaking down, but not at good trade locations from an agro perspective. We did have the destination across last week's value, which we've now tagged 4130s. And I simply took a imbalance pullback short intraday access to that idea. And I only traded it as a scalp into a new low of day.
I'm not from Colombia. I'm from that place where I am from that place where they have tacos. Exactly.
Have you ever been to Bogota?
I have not. You have?
No, I haven't. I hear it's pretty cool.
Texas? Somebody said Texas? That's not where tacos originate from.
The reason they call it Tex-Mex. That second part is key.
Hey, my layover was there and in Houston, and the food was not bad.
Yeah, we have just tagged monthly VWAP, Mark. Just tagged it.
And they're saying that I'm gonna have to start paying royalties on acceptance.
I saw that. That was really funny. That was good. You come see me in Nashville, believe it or not.
I'm gonna stop you right there. You're not about to say that their tacos are good.
Fine, don't come to Nashville. It's fine.
Have you had tacos from LA?
No, I've had very, very authentic stuff in like Northern California, like, you know, I don't know what to call it, but like towns that are, you know, entirely Mexican, right? Like, they like, you know, are there to like work on the strawberry fields and, you know, stuff like that. Like, I've been to places like that where they don't even speak English in Northern California, but not LA, no. You see what Jeff says?
Yeah.
Think in probabilities, not certainties.
When we do the LA meetup, will you come to LA? We do that one?
Yes, you know, schedule permitting. Yeah.
I'll show you some taco spots.
All right. I'm into it. Gold finding some buyers. Again, we just talked about how it was into monthly VWAP. Finally retesting the +2 for the year. We've traversed weekly prior value. So wouldn't be surprising at all to see a little bit of a bottom put in and some form of a bounce. Not something I'm going to try to trade.
Yeah, it's still in a downtrend though. It's...
For sure. I mean, it's in an uptrend on the higher time frame still. You know, it depends on what time frame you're looking at.
We took out that prior week highs and that you know, that red dog reversal right there. Boom.
Little bit of a signal there in the S&P, right? So that last move down couldn't get through VWAP, right?
Big trade.
So the first time up there, it traversed all the way back across. The second time we get up, now it comes down into VWAP on very, very light selling, by the way, on the tape. And then now we're kind of pressing those highs again. So odds of getting above 78s are, you know, super strong.
By the way, guys, I always talk about how in an uptrend, we usually come down to London's low, overnight low, maybe prior day high, take that out and then reverse. And you see that in uptrends because what typically takes place is in an uptrend, you're going to have multiple multi-day expansion candles higher. And you have to think that the lower time frame structure are corrections through time, because if we have 3 daily candles back to back going higher, what is the overnight session most likely looking at? It's a correction through time to allow price to consolidate the prior day's gains and to create energy for the expansion move that's to come from that. So if you look at that repeatable structure and you apply whatever trading, you know, approach you have, it becomes very simple where you can say, okay, if we come down, take out these lows and trigger some sort of reversal structure based on whatever you look at, you're aligning with that repeatable structure that takes place over time, right? That does not change. It will not change. Why? Because if we are to continue higher, it'll turn into a correction through time overnight, which we saw. Most of the time it comes down to take out those stops at the overnight lows, moves back up, continues the consolidation, and eventually later in the day it breaks out higher. And I'm telling you, this is a repeatable structure that it happens. I mean, I've been trading the same structure. So if you can find the structures that repeat over time and then apply your own rules, you find yourself aligning with the trend structure of the market or market structure, and you let the market do the heavy lifting because you're just sort of riding the trend sequence that it creates. And that's the
Always
whole
act
idea
from a
of my
position of
approach.
self-discipline, accountability, and confidence.
So now let's see if we can. I mean, Enki's still struggling at that overnight low. But we highlighted the strength in ES and financials, right? I brought that up. Financials were strong. What small caps doing? Small caps are green. So we're seeing a little bit of rotation. Yeah, industrials are strong. Yeah, look at that. Beautiful. And SPY's here is getting ready to possibly break out of this wedge. Maybe take out prior day high in SPY, which would be in ES would be what? 85?
Big trade.
Mark, I grew up fishing and hunting, man. That's all I did growing up.
But did you laugh a lot, Shab? Okay. You need that combination.
Big trade.
Make me laugh, clown.
And in the meantime, guys, get those likes
trade.
up. Share this with everybody. Best streaming network online. All these amazing guests that Ninja has week by week.
So many stops higher in the S&P, man. I'm telling you.
Plus one touch.
One other thing to highlight with Chris's trade is in that moment we talked about it, the hard right edge, right when it was at its scariest, him and I were both confident about what was still happening. I wanted to draw out a diagram for you guys about, look, nothing is messed up here. If you're the type of trader who continually tries to trail your stop, to aggressively move to break even, all of these things, you're never going to catch a trade like what Chris is in. You'll never be able to do it. The market is too back and forth a lot of times to allow for you to hold through it. Only by accepting the risk of the trade and keeping that stop away from where the market is and allowing that worst trading advice ever given, never let a winner turn into a loser. That's
Big trade.
I firmly think that's horrible advice. You're able to sit through some noise. You're able to allow a market to retest a key area that makes sense for laws of market dynamics or Chris's rules or whatever. It's a big deal.
I objectively identify
A lot
my
of people
edges.
cannot let go of, oh my gosh, it's in my favor now. Let's move the stop to break even. You got to move past that if you want to hold some runners. If you just want to scalp direct momentum and protect yourself, fine, that's a different strategy. But if you want to hold some runners, you got to learn to let the trade breathe and do that stuff we talked about earlier about transitioning your focus.
Yeah, baby. The reason for ES over NQ is because ES, I highlighted that ES has been stronger the whole morning. I highlighted, I swing trade stocks, so I'm able to see what multiple ETFs are doing. We saw strength in cyclicals, financials, industrials, and weakness in semiconductors. So where can I allocate my capital to
Big trade.
help me make the most while managing risk, right? So that was ES for today. If tech was leading, it would have been NQ. So it's just relative strength. All right, so we're above that overnight high in ES. We're breaking higher. Let's see if we can put in a new high and take out my next partial at 4R. So far, ES did what we wanted it to do. Dance around here, continue the consolidation, create a higher low, which we did create a higher low. That higher low held. You know, how do we know when a higher low is confirmed? For me, I get that question a lot. For me, it's when we reclaim the 9MA lower high, meaning we have our low here, we bounce into the 9MA, it's a yellow moving average here to create the lower high. Now, if we are to continue the downtrend from this rejection, right? When we took out that overnight high, we rejected hard. So if we are to continue the move lower from that and maybe make new lows, we are to reject at this 9MA, create a lower high and move lower, right? That is trend structure 101 in alignment with the 9MA, which is the main sort of moving average that I use. So
bias check-in. What is the current market
from there.
outlook?
Similarly,
Are
like
you
what
trading
we
what
did
is?
over here. We had a low, we bounced it to the 9MA, created a lower high, rejected and moved lower. In my entry, what happened here? We put in that second lower low, we put in that lower high. Did we move lower? No, we reclaimed it and triggered the reversal, right? That's what got me in the trade, that reversal of that 9MA downtrend to uptrend. What took place in this last bounce here? We put in the lower high. Did we reject and move lower? No. We reclaimed the 9MA and moved up higher. So the reversal above that lower high triggers now a uptrend because now we have a higher high, higher low structure. And in that confirmation, that's how you know that a higher low is made. Sure, can news come out and can we slap it back down and go make two new lows? Yes,
Plus
but we
two
don't
touch.
control that. Trend structure is what I can rely on consistently. And when that last lower high did not make a new low, that it was confirmation for me that we were going to move up higher back to that overnight high. And guess what we did? Now we triggered a new higher high, higher low structure, right? And how do we see that visually? Well, after that reversal here, we put in a high here. We pulled back into what? VWAP, which we talked about.
Anything can happen.
And the 90MA created a higher low. Well, funny because we're now in an uptrend, right? Created a higher low, and now we're seeing higher highs. So it's all trend sequence, and I've been lucky enough to spend a lot of time looking at the screens to identify that over time and align my trades with that. They won't always work out, but so there was a good example of how multi time from trend sequence takes place, because you had a 2-minute downtrend that ended into a higher time frame support, which also that support was a 4-hour higher low, right? So I'm buying the 4-hour higher low when the 2-minute 9MA downtrend ends. You guys catch that? I'm combining those two time frames to help me leverage a lower time frame entry into our higher time frame pullback. And in doing so, I can now leverage that entry into a multi-hour trend. And to me, that is just a trifecta. And see if we can take out 4R here so I can partial out.
Psst. XY. Morning.
Morning, y'all.
Yo, how you feeling?
I've got the sniffles. I'm a little sick.
Guys, this guy went to another party after leaving our party.
Where'd you go?
Unsurprisingly, I am sick. Yeah, I was away for another like 24 hours. I couldn't even sleep on the flight back. So, go Birds, baby. Yes, Dave. So I'm hanging in there. Does my voice sound a little different right now?
A little deeper than usual, yeah.
I can translate like what I did for Merit if you like.
Don't take him up on that offer.
Nah, I don't think so.
It does not end well. You know, I can't believe how good Jalen Hurts is as a NFL quarterback. I can't believe it.
Ooh, that perfect passer rating, huh? Yeah.
I mean, at Alabama, he could not throw, right?
Mm-hmm. They'll still say the
obviously
same
has
thing
a
about him
fantastic
now.
mindset. He's a coach's son. He gets it. He's a great leader. He's a great, just you name it, across the board.
Yeah.
Obviously a
he gets
mobile
the same slander.
QB, tough as nails, not injury prone, but he could not throw. I don't know who taught him how to throw after he left college, but incredible.
Yeah, he's. It's tough being Jalen Hurts in the way of like, you can have games where you're. I mean, he outplayed Patrick Mahomes twice in the Super Bowl, but still, he can't this, he can't that. He throws a pick. What, last week? The first pick in like 300 throws, and they're like, "Oh, look at this! Look at this! This guy can't throw."
Well, they do the same. The chat does the same stuff to us on here, right?
Yeah, Jalen Hurts. We feel it just like Jalen Hurts. Yeah, it's hard for him, but man, he balled out for sure. I still want the offensive coordinator fired, but that's TBD. No, I'm not from Philly, guys. I'm from LA. I think my Eagles fandom is, to an extent, well documented by now on the stream.
Yep, we got the bounce in gold. It made sense from that spot, but it's going to be interesting. 300-point range in gold today. That is huge.
Chris, you holding these forever or what?
Yeah.
Trust yourself to execute your plan under all market
I had
conditions.
the shorts from VWAP. That's like the 270s all the way down, and then they trailed out my runner. I tried to get short again around this overnight low area, 250s, 260s. I only got like half off right here, and then it just went all the way through. So I was on the other end. I was on the wrong side, and now it's like I can't get long right now. So we'll see what we can do, chat.
Cool.
Maybe a pullback. But all right, my time is done.
Yeah.
Fantastic.
Good trade
with
today,
you.
Chris. Enjoyed it, brother.
Same. Great gold short. You inspired me like you always do to trade gold. So I'll be
Oh, you
trading
know
that.
what? I just realized Merrick got his voice back.
Yeah.
Yeah, we were
Plus one
informing
touch.
the chat about that little situation.
All right, I'll catch you guys later.
Yeah.
All right.
Good luck, man.
Dude, feel
See ya.
better.
Thanks.
Take care,
Thanks.
guys. Chat. Take care.
Bye, chat.
You guys take care. Bye.
I sound like Barry White. What's up, guys? Yeah, so unsurprisingly,
Hey, talk dirty to me.
sick. Yeah. Yeah, I don't know. They might clip it if I say something. So. Toes. Yeah, I think I got maybe like 4 hours after dinner. Had to get on a flight. It was like a 7-hour travel, maybe 8. Couldn't even sleep on the plane. Got back to the wedding. I think I logged in about 24 hours, so that'll get me sick for sure. So you guys get the Barry White voice today. Dodgers look like they might be a lot for the World Series. I saw game 1 versus the Brewers, but honestly, I'm saying, guys, I don't really like keep up with baseball. Like the sports, the rules, all the stuff I'm aware of, but I don't really watch it too much. All my friends do. I'm a football, basketball guy. By the way, basketball's back today, baby. So, what profile's on the far right? This is an intraday profile, RTH session only. 5-day rolling on my 1 hour. Earlier when I had that short, oh my goodness, right here, this is like a 2-bar pattern with this huge wick doji continuation, and then it just went all the way back. man, dude. Good morning, guys. Kind of look jacked in the ninja group. Yeah, I mean, I haven't been gymming as much as I should have for sure. During like last year, I took a lot of time off the gym. I got super busy, so I'm slowly getting back into the gym, stuff like that. Yeah, I wouldn't say I'm jacked though. It's funny. I started working out like 10 years ago to get leaner and lose fat and all that stuff. And I've only come to learn that just building muscle is so much easier than losing fat that I 10 years later, I'm not where I want to be on the lean factor. It's also because my social life involves a lot of eating. You live in LA and you go out, unless you're like partying.
Think in probabilities,
you're just
not
eating,
certainties.
just being social, so it makes things a little tough. I am debating along. I don't like that it's balance on NQ, but ES looks stronger. But I'm gonna give this some time to shake out. I want to see what they do. We have quite a ways down on a longer time frame here. I was pretty much aiming for prior week high and back into this volume structure around the 120s. Obviously, my last two trailed out, but I think I got like 70 points on that trade, so it wasn't too bad. Yeah, if you're around the SGV, the food's really good. We've got everything. I heard them talking about tacos. I think Chris was like, "Don't tell me Nashville tacos." No way. LA's got the best tacos unless you're from the actual land of tacos. Oh yeah, we've got everything. I think we've got the best of everything, if I'm gonna be honest. Except barbecue. That's for sure Texas. That's it. There's a clear difference. Another Angela Bitcoin. Also IB high. Yeah, so ES just like ran right through IB high too, and ES and NQ are doing different things for sure. ES would give me the confidence to long NQ. I'm just pretty unsure about this tape right now. It's pretty two-sided up here. So I think for me, when information is pretty conflicted, I try to be as I guess diligent about just not taking positions until things are more clear. So we've got I had two decent shorts. Well, this one was a really nice short, right? New low day from VWAP. This one I got half off. This was maybe like 20 something points, almost 30 points on that size. Wasn't what I wanted. I wanted a continuation lower, but we're paid nicely today, so we'll see what happens here. I would be more open to a move, trying to find a move back through NQ if ES wasn't doing what it does now. It's building higher. And I am pretty wary of longs because of NQ's profile, so it's really conflicting today. I'm just glad I got the earlier trades. Dude, I don't know if you guys saw that tweet. I think Jade posted that photo of us all with the cup, and this guy was like, I thought it was Jade Cap standing next to Jade Cap. Dude, that post was so funny. Me and him, we talked for a while. Got to know each other better and stuff like that. He's a cool dude. Yeah, I think everyone there was very down to earth. I think when you meet people, you can have whatever reputation you have on the internet and stuff like that, or whatever celebrity status, but at the end of the day, people were people, right? No one. Yeah, it's easy to get along with everybody. It's awesome. It's awesome to see. That's funny. Building muscle burns fat, absolutely, yes. And then you can eat it back.
Control emotions during volatility.
Weak pizza. I don't know, man. There's some pretty good pizza spots. Well, I like New York pizza, so that's kind of my gauge. There are a lot of really good pizza spots. I don't know if you've been to like Prime Pizza. I thought it's really good. I think it's really good. Prime Pizza might be my number one in LA. Fast during the day, eat at night. Yeah, I do that sometimes. Actually all the time. I don't really eat breakfast, just like normally. I'm just used to that. So it's like an accidental intermittent fasting. Both speak Spanish, both speak Chinese. You know, chat, in case you didn't know, I don't speak Chinese. There was this guy one time who kept typing to me in like Mandarin or something, thinking that I'd be able to read it. I actually cannot read it. I am not Chinese. That was funny. For right now, I would rather be long bias, yeah, so taking this long here, but still it's kind of dicey with NQ. Now I'm regretting not just taking it, obviously in hindsight, but tape is really interesting here.
Bias check-in. What is the current market outlook? Are you trading what is?
Could have taken it on smaller size, we'll see. We got Euro close in about 20 minutes. So. Yeah, there's
Big
that
trade.
Mandarin again. And everyone's typing at me in Mandarin. Do I agree with Mayor on the whole moving stop thing? What was his thing about moving stops? Yeah, while we're trying to stock something, you guys can feel free to ask questions, and we'll try to run through things the way I see it, at least. Oh, Jade does not
Big
speak
trade.
Mandarin. Well, I did ask him. He is full Chinese, so. How's my day going? It's going all right. I got sick because of the weekend. But, what was a timepiece I was repping at each meetup? Oh, it was a Cartier Santos rose gold on leather. A lot of Cartier there. I did see a lot of Cartier. Shy was rocking the Cartier. Tanya was rocking the Cartier. JLC? No, it wasn't the JLC. I do like the reverso though. I think I do want to grab me a reverso. The prices went up a lot on those things because they bumped the MSRP, but yeah, I do like the reverso.
Always act from a position of self-discipline, accountability, and confidence.
Big
Plus one
trade.
touch.
Big trade. Big trade. Big trade.
I understand the absolute necessity of these principles of consistent success and therefore never violate them. Perceive what the market is offering from its neutral perspective.
ES's tape looks good. If only NQ could do what ES is doing, that'd be nice. Alright, so we got 2 more on there. We're in for 5 now. I think I'll keep it here. At 5, if it washes, we'll start to peel off. We'll see. The tape is still pretty negative. There's just a lot of absorption on bid, so it's really tricky. So I'm hopping in with the selling on the tape. There's a chance they won't get what they want and they will die. But as long as they're going to try to aggressively sell this spot right here for a reoffer, I'm going to stick with it. Tape is still negative. ES is working lower back into that range.
Know that consistency comes from your mental framework, not trading strategies.
So ES tape is doing well for this trade. Just need NQ to get along with it. So ES's node up top built, lost it. They tried to get back into it and they are not able to do so. It adds extra weight for my NQ short. We're trading back into the main distribution from the morning now. That should be a failed break.
Bias check-in. What is the current market outlook? Are you trading what is?
Big trade. Big trade. Big trade.
Alex, first day trading futures. Made one trade. Welcome to the party. Try to last as long as you can. That's the name of the game. What is hyperglottiness? I don't know what that means.
Every half mile kind of thing of
is comfortable. The market is a place where a man's fortune is not made by how often he is right, but by how much he has left after he is wrong. That is why the first and greatest rule in speculation, the rule that sits above all others, is the rule of position sizing. You may search for 1,000 rules about entries, exits, charts, tips, and timing, but you will always come back to this one. A man can be right about the direction of a stock and still lose everything if he has sized his position wrong. He can be wrong about the direction, but if his size is disciplined, he will live to fight another day. And the only fight that matters in this business is survival. If you cannot survive, you cannot profit. And if you cannot profit, then you have no business speculating. I have seen more men ruin not by being wrong, but by being wrong with too much. They wanted to get rich on the first swing. They believed the market owed them something for their cleverness, for their information, for their confidence. But the market owes you nothing. It does not care if you are smart, bold, or certain. It does not care about your debts or your dreams. It only cares about your capital, and it will strip it from you the moment you place it in harm's way without protection. Position sizing is protection. It is not glamorous. It does not make the headlines.
Plus one touch.
Nobody boasts in the bucket shops about how small they bet or how cautious they were. But those who last, those who accumulate, those who become rich, they all whisper the same thing: size is survival, and survival is profit. You may hear a man say, "I knew that stock would go up, but I was shaken out by margin calls." What he really means is, "I was too big for my capital." Another will say, "I was right, but I couldn't hold." That is the voice of a man who put too much on the line. Being right is useless if your size does not allow you to sit still. The market demands patience. But patience is only possible if your position is sized so that the daily jiggles, the sudden drops, the unexpected moves, do not force you out. You cannot be patient if your heart is in your throat every tick. You cannot let your profits run if every downtick feels like ruin. You cannot cut your losses if the size is so large that you refuse to admit the mistake. The whole game comes back to size. Now many beginners think size is about greed. They think, if I double my size, I will double my profits. But what they do not see is that they also double their danger. They double the weight on their nerves. They double the chance that a small mistake will become a fatal one. Speculation is not arithmetic, it is psychology. You may hold 100 shares comfortably, but 1,000 shares may break your back, even if the stock moves the same way. Your brain will not work the same when you are too large. You will not see the market. You will only see your money bleeding. You will not follow your rules. You will follow your fear. A man who is oversized is already beaten, because he will act not as a speculator, but as a gambler. The gambler bets because he must. The speculator bets because the odds are right. The only way to stay a speculator is to size yourself so that you are never forced, never desperate, never over your head. I have always said, it is not the market that beats the man, it is the man that beats himself. And the weapon he uses most often is his own greed expressed through size. How many fortunes have been lost because a man wanted to make a killing instead of a living? How many houses gone? How many wives left? How many men ended up on the street? Not because they lacked brains, but because they lacked the discipline to size their trades. It is not knowledge that saves you. It is not courage. It is not tips. It is size. A small position can be corrected. A small loss can be endured. A small mistake can be forgiven. But when the size is too large, no forgiveness is possible. The market does not forgive and it does not forget. The trouble is, most men cannot stand to think small. They dream of millions, but they do not dream of the slow climb. They want the fortune in a season, not in a lifetime. And so they take a large position, because they believe that if they are right, they will win so much that they will never need to work again. But here is the trap. When you take a position that is too large, you are already wrong, no matter what the stock does. Even if it moves in your favor, you will not be able to manage it with calm. You will take profits too soon because you are afraid of losing. You will not pyramid correctly because you already have too much. You will not be able to act like a general commanding his troops. You will be like a prisoner dragged by them. And sooner or later, that will be the end of you. I learned this lesson the hard way, as all true lessons in the market are learned. I had been right on direction, right on timing, right on the story, and yet I went broke. How? Because I was too big. When the market turned against me for just a short spell, I was forced to liquidate. I did not go broke because I was wrong. I went broke because my size did not allow me to be right. That is the cruel trick the market plays. It is not enough to be correct. You must be correct with the proper size. If your position does not match your capital, your nerve, your plan, then your correctness is worthless. There is a simple way to look at it. Your position should always be small enough that you can sleep at night. If you cannot sleep, your size is too large. If you are staring at the tape all day, unable to look away, your size is too large. If you cannot leave the market alone for fear of what might happen, your size is too large. A man who is properly sized can walk away. He can let the market do its work. He can wait. And waiting is the hardest, but most profitable part of this game. Another mistake men make is pyramiding too fast. They put on a position it works, and they rush to double and triple it. They think they are building a fortune, but they are building a trap. Pyramiding is only wise when the market pays you to do it. You must let the profits finance the new position, never your original capital. If you add with your winnings, your size grows safely. If you add with your stake, you are gambling, not speculating. It takes iron discipline to add only when the market gives you permission. But that is the only way to pyramid without ruin. Do not think that position sizing is only for the poor or the cautious. Even the richest speculators, even the boldest traders, they all live and die by their size. The great operators were not reckless. They were daring, yes, but their daring was calculated. Their size always controlled. They could take the large lines because they had the large capital. They did not confuse courage with recklessness. They could scale in and scale out because they had mastered the art of putting on size in proportion to their account and their conviction. That is why they lasted. That is why their names are remembered. The bucket shop boys who went for broke, their names are dust. Do not be fooled by the talk of quick killings. A killing can be made, yes, but not by the man who tries to make one on every trade. The man who makes a killing is the man who has survived long enough to be present when the big move comes. And survival, again, is only possible through proper sizing. Every big move that ever made a fortune was first endured by small moves that tested patience. And the man who held through those tests did so because his size allowed him to hold. If he had been too large, he would have been shaken out. The market always shakes. The only question is whether you are strong enough to take it. And strength does not come from muscles or courage. It comes from being small enough to last. There is another danger in size, and that is the temptation to average down. A man who starts small can cut his loss and move on. But a man who starts too large is tempted to throw good money after bad. He cannot admit he is wrong, because admitting it would mean too large a loss. So he buys more. He says he is lowering his average, but he is really raising his risk. And the market, which punishes pride more than anything else, will usually finish him off. A small loss is a bruise. A large one is a bullet. If you keep adding to a losing position because you started too large, you are digging your own grave. Speculation is not about being bold in size. It is about being bold in patience. It is not about betting all, but about waiting for all.
Watch what eggs
The
do
position
to
size
your
is the
brain.
foundation of your
Take a
house.
look at these two
If it
brain
is weak,
scans.
the
They both look young, strong, and healthy, but only one of them is young.
storm will take it. If it is strong, you can build on it. Without it, nothing else matters. I do not care how good your system is, how sharp your analysis, how perfect your timing. If your size is wrong, you are finished. And if your size is right, you can survive even your mistakes. That is the irony of this business. The smaller you bet, the bigger your chances of getting rich. The larger you bet, the quicker your chances of going broke. The beginner thinks the opposite. He thinks the bigger he bets, the sooner he will be rich. But speculation is a profession, not a lottery. A profession requires you to last. It requires you to accumulate slowly. It requires you to respect your capital more than you respect your opinion. And respecting your capital begins and ends with the size of your
Why don't you
position.
have to know what is going
I
to
repeat,
current market
because
outlook?
repetition
Are you
is the
trading
mother
what
of
is?
truth. Size is everything. Not tips, not timing, not inside dope, not opinions. Size. If you remember nothing else, remember that. Make your positions so small that you can take them, cut them, carry them, add to them, all without strain. Make them so small that you can follow your rules without fear. Make them so small that the market cannot shake you out with its tricks. Make them so small that you can stay in the game long enough to see the real move. The move that makes your fortune. You can only get rich in the market if you first refuse to go broke. That is the law, and it is enforced without mercy. The market is patient. It will wait until you have forgotten this rule. Then it will strike. But if you never forget it, if you always respect your size, then you can stand before the market without fear. And the man who does not fear is the man who profits. The ability to hold your nerve depends not on courage, but on the comfort of your size. Men think nerves are a gift, like strength in the arms or steel in the backbone. But nerves in speculation are not about nature, they are about position. You may be the calmest man in your daily life, unshaken by insult, steady under fire. But if you put too much of your capital into a trade, the market will make a coward of you. It will turn the calmest gentleman into a trembling wreck. It is not the ticker tape that drives men mad, it is their own oversized wagers. When a man is too big for his account, every small move looks like disaster. Every little jiggle looks like catastrophe. Every whisper on the street sounds like a death sentence. He begins to watch every tick. He cannot eat. He cannot sleep. His heart pounds at each fluctuation. And when a man is in that state, he can no longer think. He can no longer plan. He can no longer follow his rules. He has lost his nerve, not because he was born weak, but because he sized his trade too large for his comfort. The market does not ask you to be brave. It asks you to be consistent. You do not need the courage of a soldier charging into battle. You need the discipline of a banker counting money. Discipline is only possible when your size allows you to keep your head. Too many men confuse courage with recklessness. They think taking the largest position they can muster is a sign of strength. They confuse boldness with wisdom. But what really happens is that their size destroys their judgment, and judgment is the only weapon a speculator has. I have seen men take enormous lines, boasting of their courage, only to cut them at the first dip. They did not cut because they were disciplined. They cut because they were terrified. Their size forced them into panic, and panic is never profitable. On the other hand, a man who sizes correctly can watch the same dip without alarm. He knows what his risk is, he knows what his capital is, and he knows the market cannot push him into ruin with a small setback. He can sit calmly, letting the market do its dance, because his position is comfortable. That is what comfort means in this business, the ability to sit. And sitting, more than anything else, is where the profits come from. Most fortunes were not made by quick in and out trading, but by sitting through the big move. The market may go up and down. It may test your patience. It may tempt you to act, but the real money comes to the man who can sit through all that without flinching. And you cannot sit if your size is choking you. Think of the gambler at the roulette wheel who bets half his stake on one spin. He is brave. but he is a fool. If the ball lands against him, he is finished. He is out of the game. What courage is there in that? It is suicide disguised as boldness. The wise gambler bets a size that lets him stay at the table, spin after spin, until the odds turn. He may lose a few rounds, but he is still in the game. The speculator must think the same way. You do not need to risk everything to show courage. You need to risk only what you can afford to lose without losing your reason. The true nerve lies not in the size of the stake, but in the size of the reserve. I have seen speculators in the bucket shops, young and full of fire, who believed courage alone would win the day. They doubled and tripled their size, shouting to the crowd that they would clean out the house. But when the ticker ran against them, they were white as ghosts, begging the clerks for time, selling everything at the worst moment. Their courage had vanished, because courage cannot stand against a position too large for the pocketbook. They went broke not for lack of brains, but for lack of sizing. The market exposed them, as it always does, because the market is the greatest examiner of human nerves, and it always finds the weak spot. The weak spot is not fear, but size. When your size is proper, you will discover that you do not need to be brave at all. You do not need to grit your teeth or steel your heart. You will simply watch, waiting for your plan to work. The little losses will not disturb you. The small fluctuations will not shake you. You will have no temptation to snatch at small profits because you are not desperate. Desperation is the child of oversizing. It makes a man sell too soon, buy too late, change his system, abandon his rules, chase tips. A comfortable size keeps desperation out of your blood. It makes you steady, and steadiness is worth more than any tip or any chart. Many men never understand this truth. They think the secret to nerves is in the man, not in the money. They read stories of great operators who held their lines through panics, and they think those men were born with iron wills. But the secret was never willpower. The secret was always size. Those operators had sized their lines according to their capital. They could hold because they were not drowning. They looked calm because their positions were comfortable, not because they were superhuman. A speculator who sizes correctly can look just as calm, no matter his nature. You can give a nervous man the right size, and he will act like a veteran.
Big trade.
You can give a veteran the wrong size, and he will act like a child. Ask yourself this: what is the point of courage if it cannot keep you in the market? What is the use of boldness if it drives you out too soon? The only real courage in speculation is the courage to wait. And waiting is only possible when you have not overburdened yourself. The man who is carrying too much cannot wait. He must act, and usually at the wrong moment. He must snatch at safety, and the market punishes him for it. The market always punishes the man who cannot wait, and the inability to wait always comes back to size. I have said before that the market is never wrong. Opinions are. When your size is too large, your opinion becomes your prison. You cannot change it, because changing it would cost too much. So you sit, not out of patience, but out of paralysis. You tell yourself you are holding with nerve, but you are holding with fear. The market sees it and will break you. True holding comes from comfort. It comes from knowing that if the market proves you wrong, you can take the loss and move on. That knowledge makes you calm. That calm is what men mistake for courage. It is easy to say, I will be disciplined. When your size is small, it is impossible to be disciplined when your size is too large. The size controls the man, not the other way around. If you wish to control yourself, control your size. That is the number one rule, the first law of speculation. When your position fits your capital, your nerves will be steady. Your judgment will be clear. Your patience will be natural. You will not need to force yourself into discipline. Discipline will flow from your comfort. And only then can you truly speculate, because only then can you see the market without the fog of fear. Size is not about greed. It is about control. Control of losses, control of nerves, control of decisions. Too many men step into the market with the wrong idea that the bigger they play, the bigger their chances of striking it rich. They imagine size is the lever that multiplies their fortunes. But the real purpose of size is not to make you rich in a hurry. It is to keep you steady so that you can build wealth over time. If you look at the men who last in speculation, the men who grow their stake year after year, you will see that they are not controlled by their trades. They control their trades, and that control begins with size. The speculator who sizes properly is like a general who never commits his whole army to the first skirmish. He holds reserves. He measures his strength against the enemy. He advances when the odds are in his favor, and he retreats when the tide turns. He does not throw all his men into battle at once, because he knows that a lost battle is not the end of the war as long as he still has troops in reserve. A trader who puts too much money into a single position has no reserves, and therefore no control. The market turns against him, and he is beaten before he has a chance to regroup. He may think he is bold, but in truth he has handed control over to the market. Control of losses is the first duty of proper sizing. Every man who speculates must understand that losses are part of the game. You cannot avoid them. You cannot wish them away. You cannot prevent them by cleverness or by courage. The only thing you can do is make sure they are small enough not to cripple you. And that is entirely a matter of size. A small position that goes wrong is a scratch, a lesson, an inconvenience. A large position that goes wrong is a disaster. It wipes you out or leaves you so wounded that you cannot fight again. If you can cut a loss quickly and without hesitation, it is because the loss is bearable. If you cannot bring yourself to cut it, it is usually because the position is too large. Size determines whether you can obey your rules or betray them. Then there is control of nerves. A man who has control of his nerves can see clearly. He does not chase the tape. He does not listen to rumors. He does not jump in and out in panic. He watches, he waits, he acts when the time is right. But nerves are not a gift of birth. They are a function of comfort, and comfort comes from proper sizing. If your position is well within your means, every tick does not feel like a threat. A 2-point move against you does not shake your confidence, because it is not large enough to do serious damage. But if you are oversized, a 2-point move looks like the end of the world. Your nerves fray, your vision blurs, and you start acting not on reason but on fear. Fear is the enemy of every trader, and it comes into play when the size is too large for the stomach to bear. Control of decisions follows naturally from control of nerves. If you are calm, you can think, you can follow your plan, cut your losses, pyramid your profits, wait for the right moment. If you are in a panic, you cannot think. You break your rules, you snatch at profits, you hold losers, you average down. The decisions that ruin traders are almost always born of fear, and fear is born of poor sizing. A trader who puts on a line that is comfortable for his account can act with detachment. He is not tied up in the outcome of every tick. He can make decisions based on the market, not based on the size of his losses. In other words, he is in control. Greed blinds men to this truth. Greed whispers that more size means more profits, forgetting that more size also means more danger. Greed convinces a man that if he is right, he should bet everything on it. But greed never considers what happens if he is wrong. And in speculation, wrong comes more often than right. The difference between winners and losers is not that winners are never wrong, but that winners keep their wrongs small. Losers let their wrongs become ruinous, and they do so because their greed made them too big. Greed wants the quick fortune, but speculation punishes greed more than anything else. The man who sizes for greed is already half beaten, because he has given up his control. Think of a man sitting at a card table. He may have the best hand in the room, but if he bets his entire roll on that hand, he has no control left. One unlucky card, one twist of fate, and he is out of the game. The smart card player never pushes everything forward unless he is prepared to leave the table for good. He sizes his bets so that he can withstand a run of bad luck. He knows that one hand does not make a career. The speculator must think the same way. No one trade makes your fortune, but any trade can end it if your size is wrong. Control is more important than victory in a single trade, because control is what lets you live to fight again tomorrow. Now consider pyramiding. The only safe way to build a position is by using the market's profits to pay for your increase. That is control. If you add to your position with money the market has already given you, you are never exposed. You are playing with winnings, not with your stake.
What is the current
But if you
market
pyramid
outlook?
with your
Are you
original
trading
capital,
losses equally?
you are letting greed, not control, dictate your size. You are building a tower on a weak foundation. And when the market shakes, and it always shakes, the tower will collapse on you. Pyramiding is a tool of control when done correctly, and a tool of destruction when done by greed. Another form of control that comes from proper sizing is patience. A small position allows you to wait. You can let the market confirm your view. You can let the move develop. You can hold through the minor reactions. Patience is not a virtue. It is a byproduct of comfort. A man who is too large cannot be patient. He feels every moment as a crisis. He must act, and usually at the wrong moment. Impatience ruins more traders than ignorance ever did, and impatience is nothing more than the voice of discomfort caused by poor sizing. Control also shows itself in independence. When your size is too large, you will find yourself hanging on the words of others. A tip, a rumor,
Big trade.
a headline, anything that gives you hope or fear will sway you. You are no longer thinking for yourself. You are letting the crowd think for you. But if your position is comfortable, you can ignore the noise. You can trust your own judgment, because you know that a bad outcome will not destroy you. Independence of mind is a mark of every successful speculator, and independence begins with size that allows you to stay in control. The man who thinks size is about greed is like a horseman who thinks speed is about whipping the animal harder. He may get a burst of motion, but he will not get far before the beast collapses. The horseman who understands control will ride smoothly, steadily, for miles, while the other is left in the dust. In speculation, the man who sizes for control outlasts the man who sizes for greed. Outlasting is everything, because the market always gives opportunities, but only to those who are still in the game. Size is not a weapon to win battles. It is the shield that lets you fight them. The men who get rich are not those who bet the most, but those who bet in a way that kept them steady. Steadiness is the hidden edge in speculation, and it comes from control. Every man has greed inside him, but not every man learns how to master it. The way to master it is not by wishing it away, but by sizing your positions so that greed cannot tempt you into ruin. Control your size, and you control yourself. Control yourself, and you can control your trading. A man who sizes right can sit still. A man who sizes wrong must always run. That is the difference between the winners and the losers in this game. The market pays the man who can sit, and it destroys the man who cannot. But sitting still is not about patience alone. It is about the comfort of your position. If your size is proper, you can wait. If your size is too large, you will be forced to run from every shadow. Men often talk of courage and nerve, but the truth is that most of what they call nerve is simply the ability to sit without strain. And strain comes from size that is out of proportion to capital and temperament. The great moves, the kind that make fortunes, take time. They do not unfold in a day or a week. They build slowly, testing the nerves of everyone who rides them. There are reactions, setbacks, feints, false breaks, shakeouts. The man who tries to capture these moves with a position too large for his means cannot hold on. He may be right about the direction, but the market will scare him out before the big swing comes. He will run because his account, or his mind, cannot take the strain. And when he runs, the market wins, not because it was against him, but because he was against himself. The ability to sit still, to wait for the market to complete its work, belongs only to the man whose position size is right. You can see this truth in the tape rooms, in the bucket shops, in the exchanges. The men who are over, committed, pace the floor like trapped animals. They whisper for news. They curse the fluctuations. They are always waiting for the clerk to call their margin. They are never at ease, and so they never sit still. They dart in and out, covering here, buying there, always acting, never waiting. Their very size forces them to run. On the other side of the room, you might see a man who is calm, who watches without excitement, who can leave his desk for lunch without fear. That man has sized correctly. He can afford to let the market breathe. He is not frightened by a small reaction because his position is comfortable. He can sit still, and in the sitting comes the profit. The small fluctuations are the ruin of those who size too large. A 2-point drop means little to the man who has a modest line, but it means disaster to the man who has his whole fortune tied up in it. The small move that is only noise for one is terror for the other, and terror always forces action. The man who is terrified cannot sit still. He must run. He must sell too soon or hold too long, but in either case he loses. The market is designed to frighten men out of their positions before the real move begins. And the only way to resist that design is to sit. The only way to sit is to size correctly. The importance of sitting still is not a new lesson. It is as old as speculation itself, but generation after generation forgets it. Men think they will outsmart the market with cleverness, with quick trades, with constant motion. They imagine they can dart in and out, catching every little fluctuation. But the profits are not in the fluctuations, they are in the big swing. And the big swing can only be caught by sitting. If you are too large, you cannot sit. You will always be forced to take action when none is required. The market loves to make fools of such men, and it never fails. You must understand that the market is a machine designed to shake you out. It does not rise in a straight line, it climbs by shaking. It throws men off with false breaks, with violent reactions, with sudden drops. It tests every holder. Only those who can sit through these tests take the prize at the end. The rest run, not because they wanted to, but because their size gave them no choice. If you are carrying too much, you cannot sit through a shakeout. Your nerves will betray you, or your margin will. But if you are sized properly, you can ignore the tricks. You can sit, and by sitting you can ride the full move. It is not enough to be right about the market. You must be right in a way that allows you to profit. Many men predict the market correctly and still lose. They lose because they could not sit still. They could not sit still because their positions were too large. They were forced to act by their fear, or by the broker's call, or by the drain on their capital. A man who sizes properly can be wrong for a time and still win in the end, because he can afford to sit until the market proves him right. A man who sizes too large can be right in the long run and still lose in the short run, because he cannot survive the waiting.